Good morning, everybody. Welcome back to another day here in the market. Started a little early here today because I figured why not. Oh, I didn't even sip my coffee once. It's kind of cold now. Definitely gonna have to go refill that up here pretty soon. Alright, we're going to get started here in just a second, even though I know there's no one here and there's a YouTube stream right now anyways, but that's okay. Alright, good stuff. Sorry about that. Alrighty, ladies and gentlemen, for the few of you that may end up being here, well, I'll start the beginning of this YouTube stream with maybe some information that someone would like when they watch it back. So this is pretty much what's going on right now. So the VIX is starting to get above its 30-minute trend here. So essentially what that means is it's starting to put the market on edge. So right here, 30-minute 50 SMA, go to the chart here on the left, you can see from here that the VIX has broken that out. So essentially, as long as the VIX maintains above the 30-minute breakout, then we have an opportunity to pull the market back. So as we go through this morning, as the VIX slows down and arguably back test, we will look for the markets to bounce. And all in all, if the VIX ends up holding above 1630 and breaks out, then we're going to be looking to pull the markets back. So we have this situation this morning where, oh, I'm not even sharing the right screen. That's good stuff. Love it. Anyways, no one was here anyways when I was doing that, so it doesn't matter. But yeah, so we're just going to be using the VIX to dictate whether or not we're going to pull the market back down today, or if we're going to continue the long press. So cheers to that. I guess I'll just basically be quiet until someone shows up, or else I'm just really talking to myself at this point. So I'll go get some coffee. So this is going to be our kind of current target down, basically. So this will be target pullback with legit VIX breakout. Again, right now we're seeing a situation where the VIX and the volatility market are kind of back in a positive trend, arguably. So if that trend ends up holding positive, excuse me, and continues, then we're going to be flipping the VIX back to positive, and then we'd have to pull the market back. The vice versa side of that is if we start to essentially break the VIX down, then we will look to keep pressing this market in a buy signal. So there's kind of a couple things going on, and I say a lot and most people are just not going to really understand it, but essentially the market has been bullish since here where I'm pointing right now. So that's pretty much where I've been long since. So market is swing long from here. So right now we're in more of a macro swing long bullish stock market environment. But we're getting signals from the VIX today that could give us a reason to be short-term bearish. So right now we're basically waiting on the volatility index this morning to say whether or not it wants to break out and continue in the buy move. If so, we're going to pull the markets down. If the VIX if the VIX does not want to break out into an uptrend, then we're just not going to be looking to pull the market back for the time being. Well, that's not entirely true, but again, this is a situation where the market is set up in a way that we're leaning on the VIX, and it's going to be the VIX that pretty much determines whether or not we're going to pull the markets back today to about 663. And that's kind of my first thoughts. When I first wake up and I look at the morning and go, that's a potential to sell the markets all the way down to 663 with an uptrend break. With a uptrend hold on the volatility index. Let me show you what the uptrend hold on the volatility index would look like. 1 second. Dang it. Why is this? If I do perfect. Alright, so you should be looking at a bunch of different charts here. I still don't know if I like streaming this way. Right now I'm sharing application windows. So on the streaming software, you always have to bring up the application window that you want to look at versus if you do a display share, I can just drag stuff onto the particular screen. So I don't know, I'm still playing with that. All right, anyways, this is it right here. Go over to, there's two things. Well, it's the 30-minute and the 1 hour. So if you look at the 1 hour, again, the two of you guys watching, I don't know how new you guys are or if you guys know anything about what I'm teaching, but it doesn't really matter, I guess. Just know that what I'm saying is for your best interest. So right at $16.22, that would be an over-under. Well, basically one of the uptrend starts, and then, of course, the 10-day 30-minute. And so the 10-day 30-minute is right here. So that tells us that as long as the market maintains above that zone that I just mapped off. Again, you can already see it from like yesterday's close into this morning pre-market, right? This would be, how do I make this somewhat simple? Let's go to like a 5-day 5-minute maybe. So anyways, back here, market broke down, went into a downtrend, right? And now we've backtracked all the way to where the market, if above this zone, can start an uptrend. All right, so this morning, the game we're going to play is most likely this. You'll see since the market on the VIX broke up, it has yet to backtest any of that. So there is a good chance that the VIX tries to pull back to here or here and then still build a higher low, right? If we start to come in, so there's three scenarios. There's always three scenarios in the market, really. Well, two, things can go up, things can go down. So pretty much what we're going to be looking for is, does the VIX break out and hold this uptrend? If it just breaks out and keeps going, it just keeps going, right? If it doesn't do that, it's going to fall back to this yellow zone, right? And then it's going to hold a higher low. And if it doesn't do that, then what's going to happen is it starts a new downtrend as it fails to hold the higher low. So basically, that's what we're looking at, is we're looking at the VIX this morning to arguably determine how we can move the major markets. All right. Now, it's only that way because we woke up this morning and now the VIX is trading on, at, and near volatility trigger points. Okay? This is where we start a new uptrend in the VIX, or we fail this false breakup and then essentially confirm and go into a downtrend again, blah, 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 blah. Yeah, so you have the VIX on a swivel point, and that swivel point is what we're going to use to either bring the market on the SPY back down to around maybe like $660 or so, or the VIX is false this morning and the market is scared for no reason, and then this dip is going to get bought up as we break the VIX down. And that's always the thing. I wish I knew exactly which one it would be, but at the end of the day, I'm still going to have to lean to the long side of the market for the time being. Because why? Because the VIX does not have a back test of that breakout, right? I'm going to delete a little bit of that and just throw up something random there, right? And so it was something like that. That could be wrong. But the VIX doesn't really have a back test of that breakout. So we're still going to be leaning long bias the market. And also because we know that the market is in a swing long from her. Not from here, but from her. That's funny, I just realized that. From here. So the VIX is a secondary market we use, but the main market is obviously the SPY. So what we know this morning is that the market is in an uptrend. The stock market is in an uptrend. The stock market is still positive, so that means we're still swing long. But if in the event today we start looking at the VIX and it starts giving us signals that should suggest us to maybe start looking bearish in the immediate, then we will and will trust that. If the market internals, the advancing and declining issues of the stock market are performing poorly, then maybe we'll look bearish. But right now the market structure is positive. It is swing long bias. It has been that way since just before the close of Friday. The only thing that's changed since then is we arguably have the VIX giving some iffy signals this morning that we're still kind of waiting to play out. All right? So if in the event this pop on the VIX is false, we break it back down. Again, this market's just going to keep pressing up into a long, most likely, and you're not going to see really a breakdown. All right? So now we'll go over to the SPY here just so you guys can see it real quick. Or wait, oh yeah. So we'll go back over to SPY. So the reason the pullback target would be to here if the VIX breaks out, because if the VIX starts to break out in volatility, that would tell us why is the market currently uptrending. So if we start to break the VIX out, we would pull the stock market back down to said level generally. And that is because, again, if the market did not want to be in an uptrend, then the VIX would break out, right? And if the VIX breaks out, that tells us the market probably doesn't want to be in an uptrend. So we're going to take it back down to the uptrend over under, where it dictates a downtrend. All right. So right now, the uptrend over under for SPY is that yellow line. And that is what? Regular trading hours. I actually kind of have it a little off. It's right there. So you see that yellow line is mapping off our over under. So this target pullback is with the legit VIX breakout of volatility. All right. So for the moment, still have small positions on swing long because obviously the market's positive. If in the event the VIX starts signaling we should be like intraday bearish, pulling the market back, then maybe we'll look to do something bearish in that regard. But yeah, we're just in a positive market. Market's over this trend support. I should call this also the trend support. All right. So we know market has turned positive. There's no reason for the markets to necessarily be getting destroyed on the downside. Volatility is kind of broken up, but not really back tested. Now, remember a second ago how we said there's no back test on the volatility index, and so what's most likely to happen is the market, and actually these are probably a little wrong because remember I deleted the other ones, and so let's just double check. They're pretty close, but they're a little off. So we'll at least just do that one there, and then we got to do the 1 hour, and the 1 hour it's pretty accurate. All right, or wait, yeah. All right, so as we said before, these in the pre-market have broke up through the positive volatility zone, but have yet to back test. So that is a very likely scenario that these are going to market will come down to back test its uptrend over under. As a result, what are you going to see? You're going to see the markets go up in the immediate. They're going to be long bias in the immediate, and as you see the last kind of however many minutes we've been pushing the markets higher. So this long press here on the market is simply a back test of the volatility index's uptrend. Does that make sense? I know there's only two of you, but for the two of you right there, that is a really, really important learning. That's very, very, learning, I don't know, learning a study. Again, this pop that you're seeing on the market, let's look at it. Ready? There you go. Trading view. Boom, boom, boom. You see how the markets are going up? That little popper magooster McGee, this little pushy magoo. Look at that little pushy magoo. That one. That right there is simply the markets trying to backtest the volatility index's levels. Well, I'm sure you could find levels on the SPY and like, well, it's going up for this reason. But when I look at the markets in my perspective, I see that the volatility index went above levels that arguably starts an uptrend. That uptrend has yet to backtest its support. So if the uptrend is going to be legit, it either has to break out and keep going. If it breaks out and does not keep going, then obviously it's going to pull back. And it's going to pull back to where? To the levels at which it would have to hold to remain in an uptrend. Remaining in an uptrend on the VIX would be those two yellow levels, T1 being the first yellow, T2 being the second. Obviously, if we don't break out, we pull down to back test. If we pull down to back test and fear is subsiding from the market is becoming less fearful. What's most likely to happen to the market? The market is to go up. And that is what you just saw there. You just saw the markets reacting positively as the VIX is reacting negatively to back test its support. So that's pretty much what you just saw there this morning. And that would also be, that's one way to do foresight analysis right there. That's what you just saw is foresight analysis. Looking at a market, seeing price points that have yet to be tested, understanding the market structure, and then why something would go to said prices before it happens. And that can give you the inclination to be short-term long bias the market in that moment. Okay? So real quick, I'm going to add that to our chart real fast so that when we just kind of keep flipping back and forth from it. So these would be VIX pullback targets. And I'll just put T1, T2 here. So this would be T1. And this one would be T2. So those would be, again, our pullback targets for the moment. So that's obviously why you'd be short-term, kind of long bias markets this morning as we're pulling the VIX down to back test right now. So again, that's pretty much that. All right. And I got to look at a couple other things. So just, if I'm quiet for a second, just know that I am still here, just in the background. Good morning, Josh. Another familiar face there. Oh, dang it. I keep warming up my coffee and then setting it on my desk, but not on my little heating pad that I have, which is just really silly. Because then it keeps getting cold. Good morning, Brendan Flanagan. Good to see you. Another familiar face there. All right. So we're going to take a second to move into some Bitcoin. By the way, I've gone through some of the penny stocks that were popping up this morning. And you know, they kind of come and go. Some pop up, you know, and I'm not paying attention. But of the ones that kind of started popping up this morning, didn't really care for them. I haven't been able to catch anything that was decent. Even looks halfway decent. We can talk. Oh, there is this one path that started breaking up a little bit ago. Kind of missed that though. Again, that's just what happens when you're streaming and going covering the market. There's a couple things, but it's just, again, when the markets are not performing extremely bullish, we kind of struggle to find good smaller market cap plays. Anyways, good morning, Steve. Hi. All right, so I don't want to get people to... I'm going to kind of add this. I need to make sure people aren't thinking we're trying to pull the market back specifically. It's all about the volatility index here. So I'm going to put this in like parentheses and in quotes or whatever. Quotations. Come on, buddy. How is this? Alright, and so with, it's QQQ. What about SPY? Good morning, Steve. Good morning, other friendly peoples. Again, just scoping things out, trying to make sure I'm not missing anything. And when you have a bunch of different strategies. Let's take a look at the 30-minute. Yeah, and again, the market's not, I mean, if you ask me, the market is not particularly set up in a way for fun, easy trading in the moment. It's kind of, and that doesn't mean we're not going to have a great day and there won't be good movement, but it's not set up in a way that's just easy right now. What was easy was a couple days ago, like this bounce, or sorry, this reversal long kind of thing was a little easier. Some of these days where we're selling off were easier, but we have this kind of, we just have this day here just with the way, I can just read it, with the way the market's set up, with how the VIX is moving. And it's just not the easiest because we did not just start a buy signal. We did not just start a sell signal. We started a buy signal breakout on Friday. We pulled the markets back enough yesterday that started to put the VIX on levels that we have to pay attention to. So it's kind of one of those things where we're not right at the start of a move. We're kind of in the middle of one, and now we're piggybacking off the volatility index for some, direction here as well. I haven't even looked at the news, so let's see what is to come for economic data or anything. What's today? Is today Wednesday? I think so. Whoa, wait. It's only Tuesday? Sheesh. Really? Wow. Alright, well, Tuesday it is then. So Fed Reserve, Phillips something, don't care. Fed Boston President, could care less. S&P Schiller Home Price Index, kind of interested on that, just for my own personal understanding. Chicago Business PMI, job openings, consumer confidence. I mean, yeah, all good things to kind of know about, but yeah, so those are, I mean, yeah, that's important. Data moves the market, but, again, my take on it and business partner Brandon's take on it, at the end of the day, economic data in news is only there to move the markets to already predetermined prices. So the market already has mapped off where we think we want things to go. Data is then just used as the catalyst to move it to one of those, say two. We'll just say we had 2 price points. We just simply use data and news break announcement catalyst to simply give markets more volatility to push prices to where we already want them to go in the first place. Or, for example, say there's untested levels that we need to back test. So data comes out negatively. We'll just essentially use that as a catalyst to drive the markets to back testable levels and then up. So it's less about what the data actually says, and it's more about just using it to move markets to particular price points that we would like them to go to, essentially. That, again, that's as it relates to affecting markets in the immediate. That has nothing to do with like the actual economy and how that may affect things a couple months down the road. It's simply how we use catalyst data events in the stock market to move the volatility the way we want. Government shutdown. Yeah, I mean, government shutdown this. I mean, we've heard these talks before. Again, I could care less. The government's not going to shut down for forever. So for me, it's like I'm not even concerned about it. I'm not even thinking about it. I'm not saying that somebody should not be concerned with. I mean, for me and how it relates to the market, it's not. It's haven't even thought about that once today. I'm simply just looking at the volatility index, the market. Now, is the VIX up because there's talks of the government shutdown thing? Probably, and all these things. So, looking at the VIX, it's kind of one of those things where I think it's arguably just up for the moment. Yeah, kind of spread amongst some of this, maybe government shutdown fear. So maybe that's why the VIX is up this morning. Now, regardless of the VIX being up this morning because of the government shutdown, right? We have still identified, without even thinking about really any of that the VIX should be pulling back to where? To T1, T2. So without even thinking government shutdown, I don't know, job openings, Schiller home case, Mr. Fed here, Fed there, we've already, decided that the VIX should be pulling back towards that T1, T2, which granted is already really happened towards T1. So we didn't look at any economic data, nothing to determine the movement of the volatility index this morning, at least so far. And probably won't throughout the remainder of the day. So again, for me, as far as how markets move and things like that, a little bit of it obviously comes down to some data and some news. Because for the reality is the reason the VIX is probably up this morning is because the people are fearful of maybe the government shutdown. And so we're just using that to pop the VIX right now. Now, is that fear justified? Maybe. If it is justified, that means what? That means the VIX will stay in an uptrend, which means what? It's going to hold T1, T2 as support. Now, if that fear of maybe government shutdown and whatever else is trickling out there in the news world that I don't really pay attention to, whatever else may be out there, if that's unjustified and the increase in fear this morning in the market is, say overdone and it's not legit, then that means we would do what? We would pull the VIX back to T1 and T2, and it would maybe fail to hold an uptrend. And as the market on the VIX slides down through T1 and T2, we blow the market up into a long, right? And so again, it's the market is always perfectly positioned to kind of throw anyone off. So again, we know that we kind of have a market today where the people that really control it could keep the VIX in an uptrend, and that's going to prevent the markets from kind of blowing up. We also know that we're at a spot where if they want to hold an uptrend on the VIX and keep this thing, in a positive move, that could in fact slow down this market and or pull it back. So we're really just waiting to kind of see what this VIX starts to do. Like I said, I have to lean still in this moment on more of the long side of the market, but that's only because I have market swing long entry from pretty much over the 50 SMA back here. So for me, this is a situation where the market is still above the SMA, so it's still positive. But in the event the VIX actually broke out and we needed to flip the market bearish down to here, we could do that. So right now my bias is still swing long, but if the VIX tells me that we need to start breaking the market down, then we'll do that. Again, I try my best to not change bias until something really tells me I should. So, yeah. All familiar faces in here. Glad to see you guys. Cheers. Hopefully you guys have a good Tuesday. Even though I thought it was Wednesday. Yeah, hopefully you guys have a good Tuesday. Hopefully everyone's healthy, doing well. Hope everyone's family's doing well. And hopefully eat some good food today. I don't know. I don't really know what else to say. Other than, yeah, hopefully all's good. Hopefully fam's good. Hopefully everyone's doing well. Health as well. My family, actually, my niece just broke her collarbone. So, other than that, pretty good. My sister's gonna probably move home from Arizona. She'll be back, so that's kind of cool. No problem. Actually, I was supposed to respond to your email, and I think I still forgot. My bad. But yeah, maybe you're talking more about the email this morning. Yeah, I guess my other niece was playing with my other niece and maybe spinning her around from, you know how they either holding on to their hands or maybe their feet or one of the two and spinning in a circle. I think they were doing that game, and then she got thrown into the couch, and instead of landing onto the soft part of the couch, maybe she hit like the wooden armrest part somehow, but nonetheless, she got thrown into a couch, and that's how she broke her collarbone. I've broken my collarbone 3 times, too. I've broken my... Wait. I broke... Yeah, I don't know. I forget which one it's been. I think it was no left-handed... I broke my left collarbone twice and my right one once. So I know all about the collarbone breaks. No fun. Alrighty. Just gonna take a... Oh, you guys are still looking at the VIX. My bad. Should probably put you back on TradingView here. And again, if I'm ever explaining something that's not on the screen, just make sure to hurry up and tell me to stop being a dummy. Do you ever... I mean, not really. I mean, yes and no. I mean, if it's an anchored VWAP, you'll see me change the settings all the time, whether I'm looking to anchor off the low of a move or a high of a move, or if I'm looking to add upper distribution or lower distribution levels to an anchor VWAP, but that's generally the only indicator you see me mess with settings or change settings around on. Or if I'm ever changing settings, it's because of like color schemes, or like organizing on my chart. But as far as utilization, I'm usually not changing the settings over. No. Again, this is another one today where we don't really have a great established pre-market bottom, but right now, our current pre-market kind of magnet volume weighted average price on the day is at 66249. So as we go into the open, or kind of just in general, that is arguably one of our pullback targets, right? A lot of times on the day, we're always looking to back test the volume weighted average price of the pre-market session, kind of near going into the open or at some point for the day. Again, it's one of those things that you guys just got to kind of watch play out to kind of get a feel for it. But nonetheless, based off of today's market, we look and go, okay, it was pretty much flat sideways, and we've had 2 moves up. If you're looking at that chart time frame, 30-minute, we've had like 2 moves up. So to me, the predominant trend of the pre-market session is a long move. So I'm anchored to the lows and to this long up, and that gives me what I feel or think is a key volume weighted average price from everyone participating in today's pre-market session. So for me, all of the new volume that is trading and buying and selling and participating this morning has a key volume weighted average price down to said levels. 662, well, really just down towards like 66240. So if we are going to keep the long going up, then it has to just keep going. If we're going to keep the long going up with a pullback and a support hold, then it's going to be arguably somewhere down towards that box, give or take. If the long move is going to break down and fail, then it's going to have to be below here. So I think of this little red box that we put on the screen as a pre-market volume zone, at which point the pre-market long stays intact if above and starts to arguably fall apart if below, right? Now, do we know for sure, certainly every single day, if it's going to hold support there or if it's going to break down? No. But again, that's the point of the market, to keep everyone on edge. So we know that this is just a key area, right? And we know that everyone buying long and trading pre-market, key volume somewhere in about that area. So again, either we're just going to keep pressing this market off into a long, or we're going to be looking to arguably pull it back down to there, then hold support and keep it going. And that's all based on the assumption that what? That the volatility index does what? Does not break out. Does not hold T1, T2, right? If the volatility index starts to break out, right, it holds this T1 area, holds T2, whatever, right, it doesn't break down and it actually goes into an uptrend, then we're going to be looking at, call it scenario B, pulling market down, breaking support, going down, right? If the volatility index, which I wasn't sharing the screen there, but you guys get the point, right? If the volatility index holds over T1, T2, and continues its uptrend, then again, we're looking for what I'm going to draw on the screen. Give or take, it's not going to be perfect, but let's try and actually do that. All right, so if the VIX breaks out, holds T1, T2, we're looking to pull the market back here, probably fail this and continue down, and worst case scenario, down to like 660.72. 660.72 is the maximum downside selling that I would feel comfortable talking about today, because that's all I feel comfortable talking about as far as potential downside, because yeah. And again, that's only possible if the VIX really breaks out today, right? Or if there's extreme selling across the advancing and declining issues on the markets, which we won't really know until the market opens. So, the flip side, right? The flip side would just be that, again, the VIX, what the VIX is doing this morning, right, is maybe just all government shutdown fear, maybe some economic data fear, whatever, and it's not a legit breakout. And we're going to then do what? We're going to sell the VIX back down to T1, T2, and as a result, we're probably going to, hold support and keep it going. Either way, in the immediate, what we're most likely looking to do is bring the market back down towards our pre-market volume-weighted price, so that way we can at least put all of the people trading the stock market this morning on edge in the pre-market, right? So again, bringing the price down to about 662.40 or so, whether in the pre-market or going into the open, is pretty much one of the objectives of the markets, I think, this morning. And then we'll kind of reassess. Once that short-term move is complete, or what have you, we'll start reassessing. Again, all some very, very familiar faces up in today's stream. Oh, my bad. I was not, that's right. I forgot to change the screen back. There you go. Hold up, right? Wait. There it is. Sorry. I don't see the VWAP indicator in a chart and trading view also. Yeah, so I'll show you real quick where to get it. So Tony, this is where you go. So when you hear this is it right here. Well, you see I have it favorited on the top of my screen where I'm hovering. It's called Anchor VWAP. So to get yours, I don't know. It's under forecasting and measurement tools, and then it's going to be Anchor VWAP, and then you just highlight it, or you could just favorite it, and it'll just anchor to the top of your screen, and then from there you have to, click it and obviously start playing with it. It's not going to look like mine because it's kind of heavy on like the default settings, so you probably have like a bunch of different like VWAPs and stuff. But from there you just edit the settings and change it over, John Connor. Who is Connor? John Connor. Yeah, I always liked the Terminator videos. Actually Arnold was one of my favorite actors growing up because he was always doing the cool action movies and, guns and, grenades. So and so much action. So, and then big muscles and fighting. He loves the bomb. Get to the chopper. Get to the chopper now. Yeah, so those were good. What time is it? 9:07. Oh wow. I guess we did start a little early. We got time for some Bitcoin here. So Bitcoin, obviously, for those of you that were on stream with us yesterday, which was only about like consecutively 7 or so not a ton. But for those few of you, you guys obviously know we talked about Bitcoin and how it had long targets to where I'm going to circle on the screen. Here was our long target, and then once this broke out, we pretty much expected markets to trade up into here, which it did. And then obviously we told you guys when markets trade up into daily volume weighted average prices for the first time, they can arguably be resistance. So now we're getting some resistance, and pretty much our next target for Bitcoin is down here. So this box down here is one of the targets we want to see now. So that's all that is. We're just looking at hold on, there's a lot of drawings on here. 1 second. We're looking at the daily volume weighted average price from the previous low. So again, very simple stuff here. So just how we kind of took the volume weighted average price of the pre-market trading session today and said, hey, we want to pull the markets back here and blah, 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 blah. We're kind of trying something different here, Brennan, where basically I'll just be streaming for free on YouTube, and Brandon's going to kind of just run more of the private side of things to, at least trying to hopefully regrow a little bit. But also just provide a great service online, hopefully for free. Again, so we'll see how the YouTube world appreciates the amount of detailed free information we give on our YouTube streams going forward. So we're just really looking at a daily volume weighted average price off the previous low. So again, this is really what we do all the time. So, as this market is bouncing up and things look great, I'm already thinking of the down, right? Because I know that as the market is bouncing up, we're taking the volume weighted average price of this low point and then looking at where we should pull the market down to. So I'm thinking that this is, and I'm going to delete some of this stuff up here because it's getting a little busy. I had to use all this stuff to kind of map off these prices, but that's okay. So we'll just do it like that. And I'll maybe delete this one. Maybe even that's, whatever, I'll take this big one out. Cool. All right. And we're going to do this because I don't really need too much of that stuff anymore. That was all for just yesterday's stream. All right, so now we have the market. It really looks like that, where we have taken the volume weighted average price of the high of that sell move and now the volume weighted average price of the low of that buy move. And we are now creating a resistance here, and we're now looking for a pullback and a potential support here. So in between is kind of like that's anyone's game, but the areas of desired interest are this VWAP zone and this VWAP zone. There could be a million little dippies and poppies in the in between, but ultimately that's how we're looking at the markets now. And or arguably the box above. You see this box above, like that's one of them that we'd be thinking about too, where it's like, if everyone jumping in on the resistance train here on this daily VWAP fails and we break them out, we're going to take the market to here, right? If we're good enough to hold resistance here and perform, somewhat of a pullback, and if you will, then we're going to try to pull that back to maybe establish a daily high or low. And that's what we're going to look to do it at. If the daily high or low were to fail in here, then this is where we'll look to break the market down, right? So that's how we essentially take everyone who is previously participating in this market, looking at their volume and understanding how to flip the volume to said prices or pull it back down to said prices. Last Action Hero was a solid move. Fubar was good too. So yeah, there's a lot of drawings there, but pretty much that's what we're doing. We're just taking the volume weighted average price of people that play in the market and just knowing where a lot of those key volume trends are at. So basically, for the time being, we are bearish from this high. So from that move, right? So take a look at this. So from this move, we are bearish with a target of pretty much this box in the bottom, right? So that, for everyone looking right now and in the stream, the 20 of you guys, the 22 of you, because I may not have this on the screen tomorrow, right? The information might be deleted and blah, 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 just know, right? Below daily VWAP here, we look for market to go here. That's the move. We change that bias if at any point we think the market is establishing above that daily VWAP resistance, because then it can arguably squeeze off. So as the market comes up into VWAP box and gets resistance for the first tag and first time, then we look down to here. Only if we start to recover above, we would change that bias right now. So pullback targets on Bitcoin as low as 111,384 to 110,305. And those prices will increase tomorrow, because this is a daily chart and these are daily VWAPs. So for each new daily candle in volume that then gets calculated into the VWAP, it can change price. That is also why, that's another thing, that our uptrend, downtrend resistance and supports, depending on which time frame we're looking at, update per candle. So for each new day, our daily pullback target actually goes up. So again, if you watch a stream one day and go, oh, you said it was going to go down to here. It's like, yeah, that was yesterday, when that was yesterday's price. Tomorrow will be a new price. All right. So that's how a lot of times those volume weighted average prices can work. All right, gonna take some of this old stuff off and get that out of there. Oh gosh, hate that. Let's get off my chart. Gold and silver. Yeah, I mean, gold has been crushing, so I'm happy about that. One of my bigger, longer term positions that I've owned for many, 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 many years now. Let's see, how many years has it been? I started buying into gold pretty decent back here. That was, no, it couldn't have been there. It was established in 1718. So yeah, pretty much through like 17, looks like, the 17, 18, 19, pretty much right before this took off. And it was all because of just looking at this bottom here and that. That right there convinced me we were doing a WW reversal, so I started going. But anyways, so I've been holding gold, physical, and digital for many, many, many years now and have not sold any. So Arguably because I didn't know. I mean, it's like, even if it's like, yeah, you mean I'm looking at the gains, I'm like, wow, you know, it's like your whole point of buying something is to make a return, and I've made a hell of a return, but it's like, well, what am I going to do with it? I don't, I have that situation where, like, I don't really know what I would put it in. You know, it's like, it's done well. Government's still inflating money. It's like, okay, so you go buy extremely overpriced equities, or you what? Buy, I don't know what else you'd buy. You buy what? Overpriced Bitcoin? You buy overpriced houses? Overpriced real estate? Everything's overpriced. So it's already in an asset that's inflating with the market. So again, it's one of those things where I just haven't really known what I would do with it. So I've just kept it there, and that play has continued to work. So I'm kind of happy I made that decision. So anyways, gold, silver, your guess is as good as mine. One thing I haven't looked at recently is the standard deviation on them, so let's take a peek at that. But I gotta imagine it's probably getting up there. All right, so yeah, silver's getting to +2 standard deviation on daily and arguably weekly. So we know that silvers and we know that golds are obviously entering the overbought realm. Now, did we really need to look at the standard deviation to know that? Probably not, but let me pull it up for you real quick. So this is silver. Silver's again. This is the weekly chart. We're shy of +2, but if you look at the daily, we are coming into +2. Again, that could be resistance. Not saying it's going to be. It could be, but just in general, the market is starting to get to some of those more overvalued locations based off of regression analysis and statistical trend analysis, if you will. So that's silver, gold, GLD. Actually a little better, a little less overbought, if you will. 1 year day, 1 year week. Yeah, gold is trading with more of a normalized standard distribution than that of silver. Silver slightly more. Silver has distributed a little higher, or a little a little higher than gold has as it relates to regression trends. So again, gold is trading in a more normal distribution pattern than silver. Silver's trading a little more exuberantly than that of gold based off of the regression channel, which also means that they're both on the high side of trend. So they're not as good a deal right now for buying than they would be if they were, you know, trading in the -1 regression zone. So, you know, that being said, how high is gold, silver gonna go? I have zero clue. Don't have those sorts of answers there. Oh boy. Oh man. No, video's not stopped. I'm just not talking. That's all. I was just looking at some things. Nope. No, 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 no. Good sees me. No, one didn't work. All right. All right, guys. Market is, well, not open yet, but again, as you guys know, first pullback target, again, down looking towards that box or whatever. You guys know the deal. Oh, man. Tired on this Tuesday, clearly. Club going up on a Tuesday. So when the market opens, again, we will look at, oh, wrong screen somehow, forgot, I don't know why that screen's up, but no, you guys are seeing the right screen, never mind. Yeah, when the market opens, we'll look at the market internals, see how things are moving, if equities are opening bullish or if they're opening bearish, etc. Again, we have desired pullback levels down toward like 662.45 on the SPY right now. And a lot of that's going to be determined on if the equities markets open bearish or if they open and run bullish, etc. That can only be determined a lot of times by either manually looking at the stocks in the stock market individually or by looking at the advancing declining issues of multiple markets at once, which we will be looking at the advancing declining issues of multiple markets at once when the market opens. And actually our target's a little different. It should be more like that. So really the T1 of our target is 66254 for now and as low as 66245. And these can kind of move. When the market opens too, they could adjust a little lower. That's something, the more times you guys see my stream, you'll realize that pre-market volume weighted average prices can actually change price quite a bit going into the open for the day, because again, the pre-market volume weighted average prices that we're showing here are taking into consideration the volume of pre-market. When the market opens, volume instantly gets huge and surpasses all volume from pre-market. So then the VWAPs are affected more harsh going into the open as opposed to right now. So during the pre-market session, they won't like adjust or move as quickly when price starts to move, and that's because again, volume in the pre-market is less. When the market opens, volume is far heavier, so these pre-market VWAPs get affected way faster when the volume from regular hours starts calculating into them, you know. But anyways, so that pullback destination we're talking about, SPY, Again, 66254 to arguably 66245. We hit a low of 66264, so we're about 10 cents off initial T1 target so far. Got 1 minute till the open, or less than that, 10 seconds. And now remember, guys, that it's as long as the market is above this VWAP zone, pre-market long is still intact. We only look more bearish if our VWAP zone is really getting taken out, which clearly it's not for the moment. So our VWAP zone is now updated to here. Okay. All right, since the open, the Mag 7 are bearish. Things are not like really bullish for the moment. We'll give it, I mean, it's the first minute from the open again, but again, Mag 7 are getting hit a little bit. There's a little buying on the S&P. Again, I don't think it's going to be quite enough for the moment to drive prices extremely higher. So again, we're going to probably still be looking to pull this market down based off of how equities are moving from the open. NQ is getting slapped. Again, NQ arguably has targets to the downside as far as 24750 to 24730 arguably. Again, we're just pulling the market down towards that volume weighted average price you guys see on the screen. So we've pretty much done that. You know, and as we said before, guys, it's not like the market is set up really, really great today, right? Again, based off of way that the pre-market session was set up, all we kind of really had so far was a pullback target to here and then a support over under, which is still getting held. So again, we only look more bearish if below. Right now, SPY holding above. Again, this has all been mapped off in the pre-market session. And for the few of you guys obviously remember, we are macro long on the market. If the VIX starts to signal that we should be more bearish, then we will swivel. Right now, all of the negative performance on the market is being done in our FANG names or in our Mag 7. Other than that, some of the S&P issues have been bouncing, NYSE issues bouncing. So we have a market this morning where not everything is selling off. Not everything is getting bought up. We're having a little bit of a mixed open where we're seeing sell-off in the Mag 7, but buying in the S&P 500. That's why you're seeing the QQQ go down harsher right now than the SPY. If you look at the Qs, they're a little more red, right, than that of the SPY. Let me bring up the market internals real quick for you guys. If you look at the market internals here, what's happening on the left here? This is the Mag 7, right? So more of the QQQ players are just going down. But look at the S&P issues over here. They're getting bought up. So there's a lot of underlying equities, a part of the S&P 500 that are going long this morning. That's helping keep the price action of the S&P up for the moment. All right, just for the moment. But obviously the Qs are getting smoked. Remember, the Qs have a potential downside sell target towards 24,750 to 24,734 area. So again, yeah, that's pretty much what's going on. So again, good chance you're going to see NQ maybe trade down to 24,750, 24,734. All right. Obviously, the SPY is pulling back to where our pre-market over-under, as discussed, since early morning pre-market. That was always going to be our first desired pullback target. Arguably, it's happened in the pre-market session and going into the open. But ultimately, this is where the pre-market traders may stop out. It kind of depends, because if NQ reaches towards its target first and gets support, then we might bounce and blah, blah, blah. But this is where anyone in the pre-market session might get stopped out. So there might be a little bit of a harsh candle, or arguably just a stop out like that. You see how it's starting to get a little aggressive there. Doesn't mean it's going to last for forever. But ultimately, you see kind of how that candle dropped out pretty quick. That just tells me that most of the people that have been long bias in the pre-market session have all been stopped out, because we just dropped that market through their volume weighted average price. And so that's kind of typically what we do on a day-to-day basis in the market. So what we're seeing is nothing surprising, nothing out of the ordinary. This is all pretty much basic 101 stuff. NQ just hit a low of 24,756. Again, we have targets at 24,750, so this is kind of profit taking before target. But anyways, if I bring up the NQ real quick, let me see. Well, never mind. You guys can just go look at it. You guys know it's down there at 24,750 and some change and some other stuff. Yeah. So let me bring this back up to, Trading View. Yeah, you guys couldn't see that because I had it on the wrong screen, but my apologies. All right, so you guys see how the market's going down. We hit the sell targets, blah, 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 right? What did we say? We said if the VIX does what? Then we will look to pull the market back, right? If the VIX holds support at T1 or T2, we will look to what? Pull markets down. What did we see happen so far in the morning? Look at where the VIX pulled back to. Did it not pull back exactly to T1 and then get held? Yeah. So what have we done today, guys? We have taken the VIX into an arguable uptrend. It had yet to backtest trend support. So we pulled the VIX back all morning to T1, trend support. If it holds support and bounces, we can do what? We can pull the markets back a little bit. We came back to T1, held it. We've pulled the markets back, etc. So everything so far this morning is working pretty well as far as the analysis, what you should expect, so on and so forth. So our pullback target was correct on the VIX. The initial support kind of test, correct. Pullback target, SPY, correct. Pullback target, NQ, correct. Does anybody have any questions about how we have been able to map off today's market? There is 24,750 hitting right there, NQ. Target on downside there, complete. Next one would be 24,734. All right, real quick. Do you guys know why things are just crapping the bed so bad right now? Why are things just getting cooked? Arguably because when you look at the market internals for the day, you can see that our major market cap stocks are just getting destroyed. So the biggest market cap players are shedding market cap very quickly in the morning. Now, it doesn't mean that's going to last for forever. Remember, NQ is coming into those sell targets. So as NQ reaches some of its selling targets, you can arguably expect a little counter bouncing many times. But anyways, nonetheless, again, you can see your stocks are just getting rocked this morning. A lot of your major market cap stocks. So when you think about people trying to buy bounces right now, someone trying to buy the market and bottom the SPY or bottom the Qs, and you look at the market internals and you realize a lot of your major market cap stocks are getting knocked off path right now. Maybe you wait until you at least see some buying there, right? Right now we don't really have, well, there might be a little bit taking place, you can kind of see, but that's what's going on right now. We're selling off a lot of the market right now in the FANG. Now that being said, if you look at all of the rest of the markets, they're all positive. So this is a situation where we're really focused on the market internals of our major market cap stocks, and we're waiting to see a turn there because everything else is bullish, right? We see the NASDAQ stocks are, for the most part, bullish. We look at the NASDAQ, the NASDAQ bullish. You look at the SPY issues here, right? We look at SPY issues. If it ever goes, whatever, go up, don't. These are bullish, right? You look at the NYSE issues. These are going bullish. So the only things that are not performing this morning and that arguably are hurting the markets are the FANG. So let's bring up TradingView again. TradingView. There we go. So just for fun, let's see who's really doing it. So if we're looking at the FANG names, here's Apple. Apple, since the open, pulled back. NVIDIA, pulling back. Microsoft, cooked. Google, cooked. Tesla, cooked. AMD, cooked. Meta, cooked. Netflix, cooked. Amazon, cooked. Right? So we know the reason the markets are pulling back is all of the glorious names. So if at any point the glorious names stop selling off, then we're going to bounce the market. Because every other market is already running long. The only thing left is the big names. Once those stop selling off, then we could bounce the market. The flip side of that too is if the rest of the market starts to go bearish, then the bounce doesn't come and we just cascade, right? Because we just looked at the market internals and we just came up to the realization the only thing selling off this morning are FANG names. So either those have to stop selling off and then the market will bounce, or for the sell-off to continue, those have to keep getting rocked, and or all of the rest of the market's got to start selling. All right? So that being said, the VIX is starting to break down, so arguably we're going to be looking to bounce the markets here on this low, I think. And we're starting to see a little bit of bounce on some of those names. So this is what I'm watching right now, is to see if the breakdown continues, right? Because the VIX is starting to break down a bit. So it's kind of interesting, right? Well, I don't want to jump the gun just yet. It's one candle, but if VIX starts to break down T1 and arguably has to go for a T2 move, this is what we're watching. We're still on the fence of whether or not the VIX is going to break down, go to T2, or if we're going to kind of shimmy and hold this, right? So arguably if VIX breaks down T1, it's going to sell towards T2. And that might be enough to kind of start holding this market a bit. But we'll see. All right, Tom always tells. So let's go back to TradingView. And, yeah. So we're going back into TradingView here. We're going to bring back up the old SPY. Let's go look at SPX real quick, too. All right, SPX for the 30-minute. I mean, that just looks so shitty. But yeah, I mean, gotta respect the VIX. The VIX was up. We've pulled the markets back. I mean, yeah, that VIX, I mean, right now it's breaking down T1. Let me just double check some other stuff. So generally speaking, you got to be slight counter long in that area. That's why, again, I think we'll do a little bounce on the Qs. It's kind of trying. The SPY kind of already bounced a little bit there too. But yeah, ultimately, if we can break this VIX down, we'll be targeting. So this is the way it's going to work. We're basically going to be targeting the VIX down towards $16.19. So if VIX does not recover and start doing some dumb stuff on the upside, so if the VIX essentially maintains below 1638, we're going to look to sell the VIX down towards $16.19, at which point, you know, we can kind of stay, you know, slightly long this little bottom while it completes that move. But again, it's more of a slight scalping bottom. You're not super bullish this bottom by any means. And it's all dependent on if the VIX really breaks down this T1 and sells the T2. If not, we're going to obviously not hold this bottom. But I don't want to get too in the weeds with you guys because I tend to do that. But, you know, that's still what's going on. All right, so what we're going to do is take off a couple things here, as I said before. So again, VIX is again below that T1. Let me bring up the VIX just so you guys can see. This is what we're talking about right now. All right. happening in real time. Let me bring this up. Remember we said we're going to look to pull the VIX back today towards T1 and T2. And if it cannot hold support, the markets, if T1, T2 do not hold supports, the market, let me rephrase that. It has to hold T1 or T2 for the markets to fully break down. If we're breaking down T1, we're going to sell it towards T2. While we do that, we can bounce the market. What is happening to the SPY and what is happening to the NASDAQ right now? We're bouncing it off the low. Now, did we look for a SPY support or a QQQ support? A little bit. But what else were we looking for? We were looking for a downtrend break on volatility to give us confirmation that this sell-off we're seeing isn't that scary, right? If the sell-off on the NASDAQ and the SPY this morning were that scary, then the VIX wouldn't be breaking down into a downtrend right now. It would be holding the uptrend. Okay? So that's how we determine a lot of times bouncing markets and where volatility may change, right? So anyways, that bounce on the NASDAQ and the bounce on the SPY there were built off the back of A, hitting the NASDAQ sell target, and then B, looking at the breakdown on the SPY or the VIX there. So now we are fully long bias bouncing the market, and we are no longer bearish kind of on the intraday. And that's mainly because volatility is subsiding. Volatility is telling us right now that the whole breakup we saw this morning, all of the up movement is false. Don't be that scared, guys. Now remember, when we zoom out on the trading view chart, all right, also, we just hit the T2 target. Hold on, I got to bring back up the VIX. We just did what? We just hit T2 target. So T2 is the 1 hour. The 1 hour could hold a little bit of some hesitation. Let me just double check, make sure levels haven't changed. So the 1 hour can hold a little support here. So you might see a little hesitation, a little pullback on the market here. You're kind of already seeing it. That can happen. Basically, the next thing we need to happen on the VIX for the markets to continue is for T2 to break down. So we need the hourly trend to flip negative here to continue this bounce. So right now, we're just kind of letting the markets work right now. So again, we need T2 to break down for markets to continue. If they don't and T2 holds support, as you're seeing, you see how it's T2 is wicked. You see how this candle's come down and just started going green off of T2? Because those are algorithms. Algorithms use SMAs because SMAs are the one consistent calculation one consistent calculation that can be an input, a parameter within program. If market breaks down 30-minute SMA at X price, then sell to 1 hour SMA at X price, put in bid at SMA at X price. If support holds, sell markets on ask, SPY here, etc. So we're moving markets in between algorithmic SMAs right now is really what we're doing. Okay? And that is how we're able to tell you where the volatility index will sell to before it sells to. Because that's how programs and computers and computer language speaks. It speaks if this happens, do X, right? A plus B equals C, etc. So if 30-minute trend goes negative, then price goes to next uptrend. Where's next valuable uptrend? 1 hour. If 1 hour trend holds, then VIX maintains 1 hour trend. If VIX goes below T2, that is VIX breaking down. Anyways, you guys get the point. So let's go back to TradingView, right? Yeah, and this brings me back to the original this morning. For the people that first hear it this morning, what do we say? Market is swing long from here. So what was my bias? My bias is that we have to stay overall swing long or macro bullish the market right now. And why? Because unless the market is below 667.2, we're in a macro swing long. And right now, the volatility index hasn't quite confirmed a breakout. So the only way we are going to look to be really bearish here is if the VIX it has a legit breakout, right? The VIX broke out this morning, but hadn't yet tested its breakout. So all morning, what have we done? We've essentially pulled the VIX back to the T1, the T2 to test its breakout level. Now it's going to decide if it wants to hold the 1 hour support, which is what? Which is T1, or sorry, T2. So right now, the 1 hour trend support is holding, and that is what is now starting to top this bounce. So you see how this bounce on the Qs is all of a sudden just stopped right there? Or you guys can't see that. Hold on, I'm moving screen. So see how the market is topped right here on the Qs? That top right there is the VIX 1 hour trend bounce. All right? So we just topped Qs right there. How did we do that? We did that by algorithms supporting the VIX at T2. We use the uptrend on the VIX to top the market right there. All right. I hope this is all making sense to you guys. No one has commented in quite a bit, so that means you guys are all probably trading, making a killing. So yeah, if the market on the VIX starts to recover T1, then we're kind of like off the long, right? We were just long bias for short-term momentum bounce trading. Now the VIX is holding support at the 1 hour, so now we're back to basically short-term resistance selling. And now if the VIX recovers the 30-minute, then we're kind of essentially off the long bounce. And yeah, I mean, this is essentially how you pinpoint market price action before it happens, which you're not supposed to be able to do, apparently. You know what? Actually, I'm going to try and bring at least maybe the VIX into view here. So let's do that, and I'm going to shrink it a little bit. Like that. Can you guys still see that VIX chart pretty clear? Is it okay if I kind of have it all set up like that? Or let me know if I got to make it a little bigger. I can make it bigger too, but I just want to know if you guys can, if it's coming in okay at that size. Kinda. Yeah, I don't know. Maybe that's okay, but yeah, essentially, we're following this. We're following this VIX. I mean, it's not like it's gonna be the be all end all, but yeah. Oh yeah, I didn't even realize I have the hollow setting on. Whatever. We'll just do regular. Whatever. Let's do this one. Yeah, so, sorry, kind of just dozing off there almost. So, today we have pulled the market back on the VIX to targets. We have pulled both markets down, SPY and QQQ, to initial sell targets. We have then bounced the initial sell target support. We are now still holding T2 on the markets. That means we're kind of bearish still in the immediate. That's because why? Because the VIX is still holding support. So really our narrative right now is we are, short-term momentum bearish the market as the VIX is maintaining the T2 support and trading back up to T3. All right. The market internals are still bearish on the NASDAQ. They're still bearish on the FANG names. So we essentially need the bearish selling on the FANG to stop. We need support on the VIX to stop holding for the markets to stop selling off. But since that's not happening, in the short term, we are staying momentum bearish down while the macro swing long environment is still positive. So we're essentially looking to pull markets back in this this macro long environment, and that's exactly what we're doing. Also, by the way, there's the NASDAQ hitting the $24,734 target, or 34 target, whatever, right? So that would be like NASDAQ target hitting again on the sell side. Let's bring up the VIX and let's zoom out a little bit, so that will help people kind of see a little more of the patterning that's going on. So we're going to bring up the VIX again. So you see how we have pulled the VIX back to targets, and now it's kind of bouncing, blah, 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 blah. So let's look at this on a 30-minute chart. What are we really seeing here? Well, let's look at the 1 hour, and then we'll look at the 30-minute. And I'm going to delete these drawings real quick. So this morning, what have we done with the market? Overnight, what do? We broke out the 1 hour, and then that was the back test. All right. Breakout, back test, and that's how we create that little mini bottom on the VIX today. Now we go look at the 30-minute. The 30-minute has broken down here, pushed up, back tested, and then even into the pre-market and into the open today had broken out and now back tested. And as a result, we're just kind of trading around these levels, but now as a result, it's created a market where if we kind of just zoom out a little bit at our levels and then go look at the intraday, what are we seeing? We are seeing a market that is essentially trading on, over, and above levels that dictate whether or not VIX can go into an uptrend, or if VIX is going to basically continue in its downtrend, right? So that's why we're paying so much attention to the VIX today, because the VIX is literally at the level that if wants to, could essentially kick off a new uptrend, and or this would be the start of a downtrend. Remember, your uptrend and downtrend start levels are the same. That's why when the VIX or the market starts trading on them, you have to pay very close attention. Because again, if we break the VIX down here today, this is essentially going to turn into a great market bottom low, and we're going to rally the market from here, okay? That's what we're still kind of working on too. Is again, it's does the VIX enter a new downtrend here? If so, this becomes a great market bottom and we rally out from here. Speaking of, this could actually be a good time to add to my swing long, just in case. So I might even take a little extra here, just because. Might not be the, I mean, again, it's still a skeptical market, but whatever. I don't even really care. So, in the assumption that the VIX ends up breaking down, or this back test turns into a downtrend, we would assume that market can kind of bottom in this area and swing long push can take place. So, yeah, I might just have to add up a little bit in the bottom, yeah, because why not? We're still on the VIX. I don't know. I forget. Yeah, we're still on the VIX. So yeah, assuming that the VIX does end up breaking down and entering a downtrend, then we would likely bottom the market in this area, and at least, you know, do a decent long move from here, or maybe into the next couple days. Obviously, if the volatility index for whatever reason doesn't do what I just said, then I'm gonna be wrong. But again, I don't really care. I'm just gonna do what I want to do, which for now is just staying on the macro swing long, adding a little on the dip, because markets are maybe back testing, and who knows. So we'll see. What we really need here is we need the VIX. There we go. That's what I'm talking about. Suck off. We need the VIX to break down the 1 hour. Now, I don't want to get too excited because that's basically nothing. We just had like one little candle blip below. But again, what we need to see for longs to kind of work is we want the VIX to break down the 1 hour. So you see how we just started getting below it? We would really want to see trend below that, and then the market would blow off into a long trade, as it's kind of doing, but we want more movement than that, obviously. By the way, everybody, this last low in the market that we established has yet to test any volume weighted average price. So what we gonna do? We gonna anchor like that, and there was a break spot in there, so we know that good chance that pullback targets, well, would already be there to there. So these are arguably kind of pullback targets on the intraday that, you know, that are untested. So good chance micro chart even pulls back down to these levels like that. So if we're going to keep holding up, we essentially don't want to drop below T1 to keep going up. That would be like best case scenario. You just stay up and go. Again, we're essentially working the market up long bias right now using the potential breakdown on the volatility index and or sell targets on the NASDAQ complete. So when a sell target completes, then a lot of times the opposite reaction can happen, right? So if a sell move or if a sell target completes, then it's a bounce, right? So think about that. Let's say the computers wanted to move markets up and down, up and down, up and down, right? And then the computers that control the market are going short. They're going short. Then they meet their sell target. What are they going to do? Keep selling it short? No, they're going to start buying back. So if your sell targets are good sell targets, then generally there's going to be a bounce in that area. Because why? Because people that sell short have to buy back, right? So let's get a recap here. Someone in the comments, why are we long bias this bottom and kind of long momentum right now in the immediate? Does anybody know? Nobody knows. Got it. Got it. I also have no clue how much the delay is on your guys' end. I figure it's usually about like 5 10 seconds, but Real quick, I do want to mention something on the volatility index that just took place. Wait, where's my stream? Here we go. The volatility index. So know how this market just crept through the hour? There's a 5-minute gap in the VIX chart. So that means there's a 5-minute gap that was created that also becomes a very likely back-testable area. So the VIX is set up in a way that if we don't keep selling off below the hourly, then they're most likely going to bounce the VIX back up above the hourly, fill the 5-minute VIX gap, and as a result, we could arguably pull the market off this high, blah, blah, blah. Either way, doesn't really matter, all short-term stuff, but, But you can see that 5-minute VIX gap. So this basically means the VIX has set itself up to pull the market up to fill that 5-minute gap and then top the market right now on a short-term trade. See how that just happened? See how the VIX is starting to pop up? Right, and go towards that 5-minute gap and the hourly. Now what's happened? We've used that to do what? To pull the market back to the 1-minute volume weighted average price established from the previous low. Boom. There's another micro trade foresight done for you in real time on YouTube and all of the reasons why. I'm sure they're going to teach that on CNBC tonight. Yes, the VIX broke down from T1 to T2, and then again from T1 to T2, and then the VIX broke down below the 1 hour, and now we're doing the back test, right? So this would be where the VIX needs to maintain its breakdown. If it doesn't, again, we just basically top the market, pull it back here, blah, 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 blah. Same jam as always. You're right there. So that would be a failed 1 hour breakdown. So the short is getting, so the long is getting sold into. We literally covered all of this. And if the VIX comes up through T3, then we're going to be kind of off the long again and waiting. That's another thing. We just talked about adding a little bit long in this bottom just because the VIX could be breaking down the 1 hour, so on and so forth. And then looking at the market and realizing that volume weighted average prices have not been back tested. Looking at the VIX, seeing that they created a gap that needs to be back tested. So add a little long in that bottom. And then, 1 second. Add a little long in that bottom, and then basically give analysis that's saying to pull the market back, right? Because whether or not I added long or not is irrelevant of what the market is doing, right? The market has untested volume weighted average prices from the last low. It set up a 5-minute VIX gap. So what's going to happen? We're probably going to pull the market back in the immediate there, which is against the position that I arguably took. But that's fine, because that's just the way the market is. That's what's set up in the short term. There's no way around it. Just is what it is, right? But I'm not going to sit here on stream and be like, oh, guys, keep buying it long, because, it's going to go up when I'm being told the opposite, right? 5 minutes ago, I was told we should be long. Then 2 minutes ago, I said we should probably need to pull the market back, and that's just the way it is. That's short-term analysis trading. That's how that works. And the narrative hasn't changed since this morning. The narrative is still the exact same as it always was. And what is that? If the VIX breaks out, we'll look to pull the markets down, right? If the VIX breaks down, we'll look to keep pressing the markets long. Right now, what is the VIX doing? The VIX is back up, holding 1 hour support. We had a momentary breakdown, which was the last long leg in the market. That momentary breakdown. When that breakdown went to back test, it did not stay below. We have now recovered. That's kind of adding a little bit of fear back in the market. Even myself, I'm like, even though I just added a little long in that bottom, why is the market now recovering a little bit on the VIX? That's a little fearful. All right, so we're still kind of playing this game of whether or not we're going to break this VIX out. And when we do, we'll flip bearish and look to sell the markets down to its 50 SMA. But I'm just waiting for that full-fledged signal to do that. I'm going to delete some of this stuff. Again, we probably have untested volume weighted average prices from the high, so arguably could be looking at some back tests to this high point if we don't just drop out. So essentially the market has to, on the market, it's just going to have to break down right now, or we're going to go up and back test 662.99. Where is... Oh, there it is. All right. The VIX broke down again momentarily. Learning a lot this morning. No problem, Justin. No problem. Again, it's like I said, today was not going to be an easy day. This is... So, you know, when I look at the market, I'm seeing everything that's taken place. To me, it all makes perfect sense, right? To someone else, it probably doesn't. But this all, to me, makes very perfect sense. I think the markets are trading exactly as they should. Challenging, because the market for the VIX is right at its over-under levels that dictate new downtrend start, a new uptrend start, and that's going to dictate whether or not we're going to, again, pull the markets back down to the 50, blah, blah, blah. So you kind of have this market where it's not an easy setup. But nonetheless, again, let's go look at Bitcoin, see what Bitcoin's doing. Bitcoin is, I don't even know what it's doing, just doing pretty much nothing. Again, like we said, we're kind of looking for Bitcoin to come down to 111,400. Realistically, when we say that, we're just looking to have the price of the Bitcoin market interact with the daily volume weighted average prices. Okay. Also, the market internals are still selling off, so we don't have enough bullish activity in the market to kind of keep bouncing things for the moment. The FANG are selling off, the NASDAQ are selling off, the NYSE is selling off, the S&P is meh. So again, we're not getting a day where the market internals are screaming long, even while the VIX is doing all this jam. So far the day that we're getting is just meh, right? Which, again, kind of expected. That's pretty much the first thing we said, when we walked into today's morning stream. Like, the market's really not set up that great. Probably going to be a little meh. Sometimes you get a great day, but probably going to be a little meh, a little challenging as it relates to where trends are at in the market. Obviously, you guys will see that the volatility index, the SPY has come back up into our suggested counter bounce levels because, again, you'll see what that the volume weighted average price from this high was untested. So what do? Come up, back test it. So there's your back test of the untested volume weighted average price from everyone selling that last top. Okay. Again, that is another way that we predict price before it happens. I'm sure they taught everyone on CNBC that this morning. Again, that 1 minute micro back test target is complete. Arguably, we're probably just going up to the 5 minute. So what I'm going to do is show you the transition of markets from 1 minutes to 5 minutes. So if you look, you can see how we broke above that 1 minute volume weighted average price. A lot of times when we do that, we're going to the 5 minute. So if we look at the 5 minute, you see how the market is now into 5 minute volume weighted average prices, which is right here. Which is right here. So if I look at a 1 minute, that's what it looks like, right? So this here would be, 1 minute. 1 minute untested VWAP from sellers off high. And then this right here would be 5 minute VWAP untested. 5 minute VWAP untested sellers from the high. And now the 1 minute traders stopped out. 5 minute traders stopped out. They're all like, God damn it! It was short. They said, someone on YouTube said it was gonna break down. CNBC told me Jay Powell said, F your puts. Again, the objective of the market, especially in the short term, is to screw you over. How do we do that? By putting a little tracking device on your ass and figure out where all your money's at, and then we come steal it every time. What gonna break down? I don't know. Nothing. I don't know what's breaking down. I don't know what's breaking down. Well, one thing that may be breaking down again is what? Ladies and gentlemen, boys and girls. The volatility index. Wow. Wow, wow, wee, wow. Yeah, so you see how the VIX, right? You see how the VIX is doing that lower low, lower high, and it's kind of sliding down through the T1, T2. That's all beneficial to and or help hold the market and support the market and prevent it from breaking down. Either way, pretty much what this means is, again, we're still kind of macro swing long the market. There's not enough signaling right now that tells us the market's going to get destroyed. So we're simply viewing this day as kind of a lackluster pullback day that still has opportunity to get bought up, because we have yet to be signaled that the VIX wants to fully break out. When the VIX wants to signal that, then maybe we'll shift to extreme bearish or more harsh selling, but, you know. Oh my goodness. So we're going to do what now? What, guys? What has had not happened? So look at this. Ready? This is a 1 minute volume weighted average price back test. So whenever we break out a 1 minute volume weighted average price like you saw, you see how the market was below it, then we went to it, stopped out the 1 minute traders, broke them up, and then there is the back test of that trend. Very, very common thing you will see. Happens all the time. So that's what I call 1 minute volume weighted average price back test. And then again, obviously we know that the volume weighted average price from the previous lows have not been tested. So obviously we'll be looking to first pull the market back to the 1 minute breakout back test, which just happened. So pretty much our pullback target in this instant would be from here to here, which would be what? Which would be the previous 1 minute VWAPs that did what? Broke out. So there's the back test. So we always look to pull the market to the VWAP back test prior to the VWAP low if that's how it's situated. And that's how you predict the last bottom of the last 1 minute candle and the start of the last 1 minute support candle off VWAP back. Anyways, blah, 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 blah. That's what I mean, is that there's so much that's in my brain and that I know that I could talk about that it almost just makes more sense to put a box on the screen and go, this is where we're probably going. Right? Because that can be done in a second. I can't teach you all the reasons why the market's about to just go to this price because there's just too much to know. But what you can know really quickly is like, hey, that's probably what we're looking at pulling the market back to, right? But then the internet's like, but we gotta know why. You gotta know why. But it's like, I can't teach you everything in 2 seconds, especially in the real time. Just take my word for it. Shit's probably gonna happen. And then just keep tuning in every day and you'll just start picking up on it and why. I'm sure that was probably posted on CNBC too just a second ago. Probably sure they had one of those guys up there that's like one of those chart masters, and they're like showing you that the market was about to pop up there, hit the 1 minute, go to the 5 minute, and then when it's pulling back, it probably pull back to the 1 minute back test, etc. I'm sure that was probably the number one thing that was on their market analysis over the past couple minutes. I'm pretty sure this morning on CNBC they said look to watch for the VIX to pull back down towards the price of 1635 and then like 1620s as well. I'm pretty sure I heard that on there too. Actually, now that you mention it, I'm almost positive when I was watching CNBC this morning, they said that there was a sell target on the NASDAQ down towards 24,750 to 24,734 as well. Pretty sure that was there as well. Yeah, I definitely remember that one. No, actually that didn't happen. That happened here on the Boiler Room Network. That's where that happened. Cheers. Don't hate the playa. Hate the game. Dude, that's crazy. Do you see how the SPY did that micro bounce almost exactly at the start of our 1 minute micro pullback support over under? That's crazy. Must be luck. That is crazy, dudes. What's happening to Bitcoin? Can Bitcoin just go up to like 700,000 already? Man, I really hope Bitcoin does not pull back to 52,000 because that's going to suck. You know, I really hope that's wrong. I mean, the price point could very well be wrong, and that's another thing. Actually, you know what? That's a great topic for the 15 of you guys in here. Which was, what was I going to say? Yeah, that's a good topic. So you guys know that we were talking about Bitcoin, and we're kind of neutral to bearish Bitcoin now as far as, you know, longer term sentiment, right? Now, if Bitcoin market keeps going up and all that, then awesome, I'm wrong, and thank gosh for my portfolio and everyone else's. But if we're right and Bitcoin does pull back to 52K, then I'm gonna be like, told you so, told you so. And then I'm gonna be buying a bunch. But also, the 52 slash like 50-ish thousand target is also in updating targets. Remember, for those of you that are still watching earlier in the stream, like, hey guys, this is the Bitcoin target, and it's doing on a daily chart, but each day it's going to update in price, etc., etc., etc. That's the same thing for Bitcoin. So like right now it's 52, and a year and a half could be 56. Let's even say that we're wrong and it didn't go into a bear market, right, or whatever, and then Bitcoin ended up blasting up, let's just say 500,000, but it did not test the level. Then that means it's just a future pullback target that has yet to be tested. So no matter what, that $52,000 target will be, it could be an open target that has yet to be achieved 4 years from now when the price is pulling down to 250,000. So if the price pulls back in a year and a half or whatever, hits 52 grand, cool, target is achieved, so on and so forth. If the market doesn't pull back for 20 years and then the price target that I'm looking at is updated to 700,000 and then it pulls back 20 years from now and hits 700,000, then my analysis target is finally complete, even if it takes 20 years, right? So it's less of where the price is, but more the reason of why we're looking for the price to go there. And it's volume weighted average price. And that updates. So right now my volume weighted average price target is 52 grand. And I don't care when it's touched. It's just when it happens, it happens. So whether that happens in the next year and a half or 15 years later, it doesn't matter. It's when that part of the analysis and strategy completes. My projection is that, again, we're going to go down to 52 grand, and that can happen over the next year and a half, 2 years. But if it doesn't, then I guess at the end of the day, it doesn't really matter, because it could happen 6 years from now and still be fine, right? So that's it. It's not about me wanting price to go to 52,000. It's me wanting my strategies to work. So whether that comes to fruition in a year and a half or not, or if it's 10 years and the price goes from 52,000 target to 700,000 targets, irrelevant. Now everyone's gonna be like, you're an idiot. You said it was 52 grand. No, I said it was the back test of the volume weighted average price I'm looking for. Whether that's where it's at now, 52 grand, or whether that's 700 million 30 years from now. Doesn't matter. The strategy is looking for the volume weighted average price back test. When that happens, I don't control, right? So that's the thing about the price target we have for Bitcoin. It's an ever evolving target, right? We don't know exactly what the price will be when the price collides with our volume weighted average price zone. It's just when it happens, it happens. And whatever price it's at when it happens is target hit. Whether the target initially started at 52 or now it's 600 G's, doesn't matter. Again, I don't look into altcoin season. I'm not an altcoin bro like that. There's from the past, it's always been, yes, money flows into altcoins as the nearing end of the cycle. Does that continue to repeat? Do the cycles continue to repeat on Bitcoin? The world, who knows, right? And so, does money flow back into altcoins? I have no idea. Did they already flow into altcoins? Maybe. You know, it's not something I particularly pay attention to too closely. As far as like altcoins go, right? XRP, will XRP become the next big thing? Who knows, right? For one of which, all of the internet buzz around XRP, in my opinion, was very misleading, because a lot of the XRP FOMO and hype had to do with, oh, well, XRP is going to take over Swift banking, and this is for lack of better words, if you will, but take over Swift banking, and they're going to be, helping, facilitate global payments and transactions. And Swift, Swift does so many global transactions and blah, 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 blah. And it's like, if you look into the amount of money that Swift makes, which it's actually private, but there is some information you can get. I forget the numbers, but I did this math before, but let's pretty much just say the numbers don't add up, right? Now, that's if you were doing an analysis like you do on a company, whereas I'm looking at XRP, the price of it, what price people want it to go to, what they're looking to achieve, which is, let's just say, in my analysis was, let's just say XRP eliminates Swift and became Swift fully, right? They now control everything Swift controlled, all the transactions and facilitation of global money and payment, right? So let's just say they make all the money Swift is making. Does not justify any of the price targets people are putting on the markets, right? I forget what the number was. It was like Swift maybe made like 30 billion a year. I could be saying it wrong, but I probably am a bit, but just for exaggerative purposes, let's just say it was 30 billion. So it's like, okay, they make 30 billion a year in revenue. Maybe that's earnings, who knows? And it's like, and that justifies a $10,000 price for XRP. It's like, what stock do you know right now that's trading $10,000 and makes an annual earnings of 30 billion? And maybe that wasn't even earnings. That could have been a revenue, right? So it was, to me, it was like, yeah, people's reality of what XRP was looking to replace in Swift and how much money Swift actually makes does not justify X price targets. But if you don't know how much money Swift makes and you're looking at Swift as this massive global payment system, then you're like, yeah, dude, XRP could be huge. But it's like, yeah, but how much are they really making? And it wasn't all that much, right? It's a lot, but not like that. Now, that's only looking at the type of money that Swift brings in, and now this cryptocurrency could validate transactions, and then maybe you can build applications on top of it. So there's more to it than just that. But if you break it down at least simply to something I could understand, which was money coming in, just the money alone coming in from Swift would not justify some crazy astronomical price on XRP, especially with the amount of token that was in circulation. Then again, I haven't done that much research in a while, so I could be a little out of date on some of this stuff. And I am by no means an XRP expert. I am by no means a cryptocurrency dev, cryptocurrency, application educationalist by any measure. So I know there's things that XRP cryptocurrency aims to solve that I am unaware of full circle, right? But the things I did know were that. And first and foremost, it led me to this doesn't... Pretty much everyone talking about this, it hasn't done any research. Or the research they've done is not enough, I think. At least as it relates to Swift banking and how much Swift makes and how much that would actually do for crypto on XRP. And also because I wasn't necessarily smart enough to find all of that information myself, I used handy-dandy ChatGPT to figure that one out too during that time. So all the mathematical breakdown, this and that, was basically done by ChatGPT, but how to get there was obviously done by me. And again, I found out that Swift, I think, is private, and they don't really disclose their financials. But there had been some years they gave some brief talks on what they were making, and so just from some of the little information we could find out about the financials of Swift on the internet, basically led me to that conclusion. All right, that's enough of that randomness. But yeah, so cheers to that. So let's just make sure we got this all good. So this is on this guy. So on Bitcoin, this is daily VWAP resistance over under. Now this is going to be daily VWAP support over under, aka sell target. So as it relates to, Bitcoin, these are two very interesting points that we're looking for, right? well, we were already looking for this. Now we're looking for down to here, right? And if we can do that on Bitcoin, then we're essentially keeping the ebb and flow of the market alive, which would be, sorry, let me zoom in here. Yeah, so again, if we can bring Bitcoin back down to that daily zone, all we'll be doing is essentially keeping the daily trend kind of formation going, or one of the two, right? So the same way we saw this, right? See how we saw the daily go back here? This was all daily down, bounce, down, bounce, down. Now it's swing up, pull back down, maybe bounce, right? Or fail to hold higher low and then whacked, right? But that's not what we're looking for. So again, just a pretty overall. Well, I don't want to do all that. I don't want to delete all those drawings, so just put those on. Yeah, so again, we're just looking at yield SPY. Again, that VIX. What's the VIX doing, guys? Hey, yo, guys. The VIX is just not breaking down. Right? It's holding that support. So we're going to bring... Oh, you guys are still looking at the VIX. I was looking at... Dang it, I had the wrong chart up there. I don't even care. I've done that so many times today. But, yeah, here you can see the VIX. What's the VIX doing? VIX is holding in that 1 hour level, not breaking down. So what's the market doing? Not blasting off into a long. Again, the VIX has to break down through the 1 hour, through the 30-minute, and actually trend down in order to see the markets keep pressing off into a long move, etc. And since this is not happening, it's just not happening. There's not a whole lot to say there. But one thing we do know is that with a choppy kind of awkward day like this, we're going to reset a lot of traders pretty frequently. So, as long as the markets kind of stay doing this dumb range like you've seen, we'll just chop suey everyone. And when we do that, we typically just kind of pop back and forth in between, like I said, volume weighted average prices frequently. So the last one was been here, and then that was break down. Yeah. So right now, our current pullback target for this is... It's kind of a goofy one right now with the way it's set up, but yeah, our current kind of counter is going to be like to here. Right now, the SPY is kind of starting to... Or when I say the SPY, I mean the market internals are kind of lackluster, selling down right now. The NASDAQ is bearish. NYSE bearish. NASDAQ 100 bearish. S&P issues bearish. FANG names kind of trickling up, but not extremely bullish, etc., etc., etc. And when I say bearish, again, remember, I'm just looking at the particular candles that have been on here. All right, so when I look at the market internals, what am I seeing? I'm seeing in real time there is not one green candle amongst any of those markets. So if there's not one green candle, then I don't expect in this exact moment the market should be going up. Because why would the market be going up if literally everything is going down? Right? I wouldn't. Now, could everything stop going down and start going up within 3 minutes? It could. But that is not what's happening right now. They're all going down. And what are we seeing on the VIX? We're seeing what? We're seeing that the VIX is not breaking down. It's actually coming up and recovering the 1 hour and the 30 minutes. So that is short-term bearish for the market because volatility is increasing through levels that determine volatility increase. So as the VIX is creeping up through the 1 hour and as it's creeping up through the 30-minute, we're not long bias micro trading the stock market because the VIX is increasing through levels that would suggest to be cautious. I do not look at the tick chart. I've tried to look at that stuff in the past, but it doesn't really help me. I've looked at I keep the VOLD on a little bit, but anyways, so. Again, guys, our micro retrace target's still really the same. But like I said, the VIX is coming up through the 30-minute. That means micro bearish. Everything in the market is selling. There is no bullish activity for the moment. But again, when this volatility on the downside subsides a little bit and we start to get a bounce, the markets will be targeting back to the box on the screen. Unless new levels come into play that would make me change that. So we'll see. All right, so again, right, you see how the VIX is coming up through that zone. That's a breakout, blah, blah, blah. And now, like, I brought us over to TradingView, the box on the screen with TradingView. That is the current micro trend retrace target, etc., etc. Why is the market pulling back? Because all of the market internals in the stock market are currently going down. And because why? Because the VIX, as I'm showing here, is breaking up through and starting uptrend potentials, etc. So for computers, think in terms of computers, not in terms of your self-trading. Think in terms of computers. Computers go, okay, everything on the market internals is bearish. The VIX is coming up through uptrend levels, blah, 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 blah. There's no reason to be buying equities long right now, so then the market pulls back, right? These computers can think of that all in real time very, very quickly, much faster than you can. So anyways, nonetheless, we have untested levels from our last sell leg, which put the market back up towards the price of 66242, etc. The only reason I think we may not go up and get that is if we stop on the volume weighted average price, which is right here. So there might be some hesitation right there because that's the actual breakdown one. So I'm looking for the back test to here, which just completed. And then we'd have to get above this guy, and then we could go into that box. Now, the reason that I picked that little level you see on the screen, no, you can't see that because I have the wrong screen up. Sorry, there we go, TradingView. So that's pretty much what we're looking at right there on this market. All right, the counter retrace micro pop target pretty much complete there. Maybe it goes a little higher, maybe it doesn't. Again, I don't care. Why? Because pretty much what we had looked for to happen has happened. Whether or not it gets the absolute high of it, again, that's you're fighting for scraps at that point. But anyways, guys, there's your micro trend pop retrace target complete. Now, if the market wants to stay bearish, it has to stay below, obviously, our long target destination in the micro, etc., etc., etc. Cheers to another foresight target announced on YouTube before it happens and then watching it happen perfectly. I'm sure that was announced on CNBC just a few minutes ago as well. I know our stream probably gets boring with knowing what's going to happen to the market before it happens many times. I know that probably gets old. I know you guys would probably be confused, probably rather not know what's going to happen before it happens. I'm sorry, but that's just not the way our stream operates, unfortunately. Bow, wow, 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 wow. NFP, I don't even know what that is. The Friday as news is not an economic. I have no idea what that is, to be honest. Non-farm pays. Non-farm pays. I have no idea. I have no. Like I said, I don't even try not to look. Well, it does help sometimes. It's not entirely true. I probably could do even better if I really actually focus on that stuff because we know it's just used to manipulate price action. Like, no one really, like, people trading the market, no one really cares what the non-farm payrolls are. They just want to move the market. You know what I mean? Like, people who actually sit here, like we don't care. Like, cool, non-farm payroll, like, whatever. Is it going to make the market move in a tradable environment? That's all we care about, right? That's really all the market actually cares about when economic data comes out. Unless you're like a fundamentalist and economist, then you care in that regard. But if you're someone who trades markets, you don't care. You just want it to move the market, right? All right, so you guys have learned this one before, right? So this is the 1 minute volume weighted average price back test. Where does this market go if we break out the 1 minute? A lot of times we'll do what? Look to the 5 minute, which the 5 minute setup is really not established all that great, but it would be like here. So if the 1 minute ends up giving up and it breaks up fully, then it's going to do what? Usually go to the box on the upside. Pretty much just like that. Now, it hasn't fully hit it, whatever, again, but you get the point. That's pretty much it. Oh my gosh. Wow. The stock market just traded up into our 5 minute volume weighted average price target from the 1 minute VWAP breakout. That's crazy. Who would have thought? Excuse me. You guys must be getting bored. I'm pretty sure that one was on CNBC a second ago, too. Oh boy. Alright, what's another thing that's going on? Look at the VIX. What was the VIX doing in that moment? The VIX was failing to hold above the 30 minute and then breaking the 30 minute back down towards where? The 1 hour. Now the VIX is really, really choppy. I wouldn't take today in the VIX and be like, this is an amazing day. No, this is like an annoying day on the VIX, but you can see how we're basically just chopping this market in between the 30 minute and the 1 hour, basically keeping people on this, oh, I don't know, is it going to break up? Is it going to break down? Is it going to break up? Is it going to break down? So the VIX is just doing a day where it's just not picking a trend right away, and that's okay. Just give it some time, it eventually will. All right, so the SPY has now what? Has yet to backtest its previous 1 minute volume weighted average price breakout. So now we expect what? Arguably the target to be back to the red box on the screen. If it doesn't obviously just keep going up, but now we'll probably be looking at something like this. Low. And up to here, which is, hold on. Why isn't it working? Oh, it's a highlighter there. Does it go there? Yep. So pretty much the red box on the screen now. That one, red, green. That's the current pullback destination if we don't just keep blasting off for the moment, obviously. But yeah, this is going to be our volume weighted average price target now. But again, we just got to keep letting the market work its way up. And that might be used now. We'll see. Oh, you're looking at the wrong screen. My apologies. So, right about, yeah. All right. So, but, I would say the important thing in this moment right now that you're seeing is what? What did you guys just see? You just saw what? You just saw the VIX break down, right? It was up on that 30 minute. Now it's sold down. Now it's below the 1 hour. So that's not bad. This one's kind of, I don't like the way this is currently. It's kind of a goofy one, but it tells us that our pullback targets on this guy are like from here to there now. But again, I'm not. This is just the way this is forming up. I'm just like, eh. As far as like micro trends go that we're talking about, it's kind of eh. But yeah, so it'd be like here to here. Yeah, so again, really start of the big red box to as low. I mean, that's the current targets down, like here to here. All right. Here we go. Again, that would pretty much be pulling back to where? T1 in the micro. So that would be T1 kind of complete there. And then obviously like maximum down for the moment would be to like here. You like T2. And this one here would be like T3. Yeah, anyways. And market's on that 15-minute. Anyways, you guys can see, I know I didn't really update it on the last second, but again, our little micro term T1 and T2 pullback targets on the SPY have been completed, and there's your press off into a new long. So again, some more foresight analysis targets in real time given out and hit. I'm sure that one was done on CNBC. Again, new pullback target will be put on screen in about a second, which is now this little box that I'm moving. I'm going to take off this one. Pullback target pretty much complete there. As you can see, we're pretty much just back testing to the previous low candle. Really no big deal there. Boom. Now we need to wait for the chart to establish itself more before we give any new short-term micro targets for the market, because it's just not developed enough. Well, it's not entirely true, but What's going on, everybody? How's everybody doing today? Again, markets are holding. The macro swing long is still intact. So for those of you that got long on Friday at the end of the day and you are still holding long Magoo, cheers to you. For those that added a little on today's dippy when we talked about it, cheers to you. You're doing well, brothers. And then to reiterate why we are macro swing long and why we are not full-blown bearish today is because the market is positive. It is a swing long market for the time being. There was nothing on the market that said we were breaking down, and the VIX never quite confirmed if it wanted to break out. Therefore, we do not flip full-blown bearish. We are just pullback biased to dip long still. Okay? Pretty much any time the market is in an uptrend, we are higher low, higher high sentiment. Unless the VIX starts to break out. Then we look to be a little more bearish on our pullbacks because it could be telling us the market will enter a downtrend. So no matter what, anytime market is in a buy signal or buy program, we are higher low, higher high seeking. If the market is in a downtrend, then we're lower low, lower high seeking. And the only time we kind of really change that sentiment is if the VIX starts to give us strong opposing arguments. And today was a day where the VIX, I mean, even still, right, still has the opportunity to maybe throw us for a whirlwind. So again, that's why we're leaning a lot on the VIX today. Oh, my bad. I forgot to put our pullback targets on the screen, but they are two right here. It's pretty much already did it. It's already pretty much complete, guys, so it's not like... See, I mean, if you really care to watch the screen, but not that, you know. So the pullback targets would be pretty much here to here on this guy. Right there. So we just did that. That one's done. So again, you can pretty much see we just took the volume weighted average price of this last dip in the market, extrapolate it forward, and said that's where our pullback target and support's at. And that's how you basically create the wick or the low of a wick of a 1 minute candle within the largest globally traded S&P 500. And there you go. I'm sure that dip by opportunity was on CNBC. Oh my goodness. I don't know what else to say, guys. I wish I was more of an entertainer on these YouTube streams. Wish I was more entertaining of a guy. I mean, honestly, like, I'm about to just play some Slither IO. I mean, I have nothing else to do. Are we ready for the drop? I love how you always ask me that, but you already know the answer. You always ask me, are you ready for the drop? But you already know the answer. Market drops when we go into a downtrend, brother. So it's like, you know what I mean? Like, you've learned it. You don't got to ask me. You know this. Easy. You know that the markets will go down when the markets enter a downtrend. So you go look. Is the market in a downtrend right now? Go look at the S&P. Is the market trading above or below its 50 SMA on its 30-minute? The market is currently trading above, so no drop, right? Now, if you would have asked me this last week, or a couple weeks back and said, Connor, when's the market going to drop? I would have said, when the market goes into a downtrend. When the market go into a downtrend, right here, and drop. All right, now you come onto stream. You go, Connor, when is market going to drop? Market will drop when the market goes into a downtrend. Sentiment activated, baby. Joe, I'm assuming you're meaning like the standard deviation draw line, or are you talking about like I'm assuming that's what you mean. Or maybe you're talking about like overlapping some SMAs, because that's usually, yep. Again, that the market loves its, because again, it's a statistic. That didn't make any sense. I was about to say, I'll say statistical probability. It's like, wait, where's my let's see, 1 year day, XSPY. Yeah, I mean that's just kind of it. Market likes trading. It's +1, +2, trend, etc. It's like if we look at today. So, for example, I don't know if I'm even on the right screen. I don't think I am. So, if we look at today, where is the SPY chart? Market internals fix. Yeah, if we look at today and we look at the standard deviation on the year, where is the closest daily standard deviation? The closest is right here on this low, right there at 66156. Let's look at the 180-day real quick. 180-day, there's really nothing nearby. I mean, I could always get a deviation if I throw some halves and stuff like that, but nah. Let's take a look at the 1 year week real quick. And the 1 year week has a weekly standard +1 DV. Oh, and I gotta increase the screen, then drag it down. The weekly +1 standard deviation is right, here. So when we come into today, and we're just looking at the wait, that doesn't make sense. Something feels off. That is crazy. Hold up. Oh, no, I get it. Yeah, my bad. Because that was a weekly chart, so I should really be extending this. Extend left. All right, so in other words, today, the most close standard deviation level was on the daily that we look at would be right. Whoa, I increased that quite a bit. Would be right there on that low, 66170. So close to today's bottom. So I would classify also today's low point here as a +1 standard deviation bounce on the daily, if you will. Along with what else was that? Volatility index, family to stay in a downtrend, QQQ hitting its 1 minute, sell targets, and so on and so forth. So there's quite a few things there. I wasn't actually looking at the standard deviation this morning at that level, but I was looking at a couple other things. But yeah, so cheers to that. Obviously, you guys can see the SPY's pulling back. We've already taught you where it's probably going to pull back to here. So right now, the pullback target of this move is pretty much where I'm going to draw this, which is all of, yeah, pretty much here to here. And now the micro retest target is up here. And this is, you know, a lot of times how you create a chart, right? This is how you create the patterning of a chart. So now you're going to have a counter target like that. So in the immediate, right, there's your support box, there's your resistance, up and over, target, that one's done. You know what's crazy though is as far as, you know, targets and forecast, I mean, we have, I don't even know how many micro forecast and targets and tradable ideas we've given out today, but it's got to be 10. And pretty much they've all worked to the penny. So that's what I find most fascinating is we pretty much have a YouTube stream that's market forecasting in real time before the moves happen and being accurate within pennies almost every time. That's pretty awesome. So I don't know what the average forecast record looks like for market analysis, but we're doing, I'd say, pretty decent here, especially on this day. So again, I have my superstitions that if our stream was very popular, then maybe some of this wouldn't work so well, because I think maybe, you know, the more people know about things, maybe the less it works. Who knows? But we'll see. I also have my superstitions that the last thing the internet really wants is a stream like this on YouTube for free that gives you what I personally feel is very, very accurate market forecasting. Also very accurate foresight analysis. I just don't believe that that's really what the market wants available on the internet daily for hours with no charge and, you know, if you will. I think there's arguably maybe some gatekeeping in that regard. But, you know, time will tell. I that's why I got to be here every day and I got to give it my all and give it my best shot, because, you know, that's the only way to know for sure. For sure. So, anyways, I hope you guys like the stream. Again, I hope you like, I hope you subscribe, I hope you share it, you know, in trading communities, because at the end of the day, I guess if the reality really is to help people and educate people, then that's what you do. Anyways, there's our next micro pullback target completing there. As you can see, we had untested volume weighted average prices from the most recently established low in the market. So now everyone that's been buying the market long up on this rally, we've effectively pulled the market down to some of those key volume weighted average prices. So those guys are hurting right now. So yeah. Oh, am I on the wrong screen? You know what? I think tomorrow I'm going to change the stream settings because, oh, dang it, I'm on this dumb chart. Yeah, I'm just going to go back to maybe display sharing because it's a little easier to manage. Sorry. But yeah, there you go. I mean, those are your pullback targets completing. Obviously, you guys know what happens when you take out the 1 minute trend. A lot of times you'll go to the 5 minute. So that's the 1 minute. Now let's look at the 5 minute. See where the 5 minute is? Here's the 5 minute low. So though I didn't have it on the screen, I've already taught you this like 3 times today. So even though I don't put it on the screen for you, in the back of your mind, you know, oh, Connor said, you know, if the 1 minute established trend breaks, a lot of times we transition to the 5. So in this instance, what did you just see? You saw this is the market going up. We came down to the 1 minute trend, broke it down, so we go right to the 5 minute, which is that low and that wick. All right. Again, so you've been taught exactly why the market just did what it did there as it relates to VWAP and volume weighted average price structure attached to current market structure. Okay. Now what do? We look backwards. What's just happened? I'm going to delete all this. I don't even need it. Ready? What's going to happen now? Well, what do we have? Right? We have lower low, lower highs from this top. Okay. Repeat process. So in this case, we'll just look back, starting from where we're at to where we've been. Well, we know that the volume weighted average price of this high has not been tested. Okay, so this is now a counter trend retrace area of interest. In this setup, I also see this green candle here. So it's like the market attempted to maybe bounce there, but then stopped everyone out. So I'd actually add a new volume weighted average price on that breakdown. So that would tell me that the 2 key volume prices for the market to pop back to right now would be those 2 boxes. Obviously, the first one would be the first one, and then only above this one you get that one, etc., right? And the reason it works like that is because the market moves via volume, right? So the first interest of volume to me would be that first box there. Next interest of volume would be the next one, but they're like doors, right? You can only get to the second room or the second door by going through each door and opening them successfully. So target today's low of day. I mean, I guess you might be able to do that. It's not really a target of mine for the moment. I mean, I definitely have a 30-minute down here that we could be going for. I was going to say, like, this would be... Oh, wait, that's not adding right. Hold on 1 second. Low. That doesn't really look good. 15 minutes not established enough. I mean, yeah, the sell-loss would be down to the 15-minute and the 30-minute with full-fledged moves. But our target was already this right here. So this was already our sell target, right, for the top. So from the top down, this would be a pullback target we've completed. So now it's kind of like, hopefully it just keeps going, but I'm not really looking at much stuff down for the moment. I'm actually looking for these eventual resets. And now there's another green candle in there, so someone got stopped out, so it'd actually be here. Settings low, high. So this would be the next target on the first pop back would have been here. See, this is like what you're seeing now is when the market stops doing the lower low, lower high formation, and it just kind of keeps going down. It's shelving down, right? So this is what you start to see when it shelves down. And when I say shelves down, it means instead of doing lower low, lower high, lower low, lower high, you're doing this down, little green candle fails to bounce, down, little green candle fails to bounce, down. When it's doing that, it's more of a cascading sell-off, and you're no longer doing the lower low, lower high formations. Not that they won't come back, it just means they're not doing it right now. And this is what you're going to start getting. You're going to start getting way more counter trend levels because of all of those false bottoms in there, right? So this one hasn't retraced. We had a false bottom in here, so we're going to be using this one off of that guy. So this is now down here. And this is how you essentially chase price action down when things stop cooperating. So now our targets would be like that. So these are all of the targets now. Like right there. They're all clustered in that area. And remember, at the end of the day, you don't control the market. The computers and high frequency trading and algorithms really do, you know. But so there's pretty much T1 of our counter micro pullback target completing right there with that candle pop. Now, obviously, if we're going to go up and get T3, which would be this high box, then obviously the price needs to do what? It's got to come up and through these guys, and then it will achieve it. Now, it's obviously not that big of a move here just because of the way the market is currently positioned itself. But that would be it. So this would be, again, our sell-off, counter pop back, T1, if clear, then you go get arguably T2 or T3 of that little setup there. And then where's our 5 minute? So if we look at where our 5 minute's at, our 5 minute is arguably this one here. So then the 5 minute target would be up here. So if the market does end up kind of bottoming, resetting the 1 minute, then we would have a 5 minute. But anyways, so I can already show you how the 1 and the 5 minute are now set up in real time. Which basically means only if you clear 1s you go to 5. So we're still on a downward move, and all of this is counter pop resistance and down still. Only when we clear above will you go to the 5, right? So what are you seeing? Right now you're seeing the counter pop to T1 and initial resistance trying to hold it down, right? Right now, the market internals are not very bullish on the market. S&P issues are getting sold. Volume is down. NASDAQ's down. And some FANG names are kind of like, it's kind of hard to tell, actually. I can't really tell if they're going to go down or kind of hold for a second, but they're still a little on the red side. NASDAQ red. So it's like we're not seeing aggressive buying into equities in this exact moment while this market is coming down, etc. Our streams just have, I think our streams just have too much information. You know, it's just TMI, you know. Like almost every moment of every market turn, we're giving you strategy and edge to be on top of the market. Again, it could be just far too much information, maybe. You know what I mean? Like, while someone's probably still thinking of pulling the market down, we're already looking at where we're going to counter it. You know what I mean? So that just might be one of those things. Maybe it's just TMI. TMI. Oh my goodness. The market is doing what we said it could do right on the screen. Pop back, hit T1, get a little pullback. Why? Because markets don't really have many bullish candles for the moment. Crazy. Who would have thought? I'm sure that one was on CNBC. Or maybe they would still have you believe it was inflation or something. I don't know. Who knows? Who really knows? I don't know. See, where's our 15 minute? So we just hit the 15 minute here. Now, if we obviously slide that one out, arguably you're going to look down towards that 30 minute, which at this point would be the low of day. So we might be looking down towards this 30 minute here. And obviously that's as the 1 minute stays down. So the 1 minute rejected, created a lower high here, arguably. So now what are we going to do? We're going to anchor to that high. And that breakdown, this one's again another one of the ones a little goofy, kinda. So it's got a lot going on here. So I'm gonna take this guy, and now this target's gonna be from here to here. So as long as the market stays below that current box in Magoo, then we're just gonna basically trade down and then arguably hit that 30-minute, which is the low side. All right, so now that's what our market looks like, is this. So you pretty much have market down into 30-minute now, which is the low a day, which is what Easy Win said a bit ago. And then this would be a 15-minute. So your 15-minute breaks down, goes to 30-minute. This one I think was a 5-minute, so 5-minute down, bing, 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 etc., etc., etc. All right, cool. There you have it. So that's all done. Probably should take a look at the VIX. So the VIX is obviously probably coming up and doing a little bit of a breaky poo there with that move. I can already assume. Yeah, a little bit. Yeah, so VIX again is starting to go back to positive. So the VIX is positive. Again, you get this sort of hard trading and not aggressive long bias movements. I'm kind of pulling back when the VIX could be talking about a breakout, right? So anyways, hopefully that makes sense. So real quick, I'm just going to pull up this VIX chart so you can see. Where is my gosh darn thingy? There it is. Pull this down, do it like that, and then we're going to go do what? We're going to go look at the VIX. You can see here on the VIX 1 hour, the VIX 1 hour is positive, and if we look at the VIX on the 30-minute, VIX is positive. So if you go look at 10-day, 30-minute, what's happening? The VIX just pushed back to positive, right? Market is pulling down. So this is all very, very normal. And now what are we going to do? We're going to look to see if the VIX maintains over the price of 1632 and then goes into a breakout. Then we're going to look to continue to sell the markets down for the remainder of the day and or into the afternoon and or overnight. If the market doesn't maintain a breakout, then that just means we're not going to be pulling the markets back too aggressively for the remainder of the day and so on and so forth. Obviously, I'm not sharing TradingView, but you can already imagine what we're doing. We are retracing the most recent 1-minute lower high volume weighted average price as a counter target. So if I bring this up and I delete all this random bullshit off the screen and we go like that, I'll take a VWAP. We're going to go to this lower high. We're going to add a VWAP. We're going to add a VWAP, and then pretty much that. There you go. There's your counter retrace target. Done. Complete. Boom. Finito. And that, ladies and gentlemen, is more foresight analysis. Oh no, Bitcoin. Why is Bitcoin going down? That's weird. Who would have thought? Again, guys, we got a little bit of a daily support over under shell target down to that 111,400, 210,200 or so. Holy smokes, look at the volatility index. That's crazy. It literally just did exactly what I drew on the screen. A pull back to, well, I guess it did miss, but pull back to yellow level. Now, again, it's only one candle, but obviously, because that's the SMA calculation. So if we're going to break above it, hold above it, it's either got to break out and just keep going, or obviously it's going to pull back and then retest. And the retest would be that yellow line. And that's another thing, guys, is that, remember, markets can only do two things. Up, down. And even when they're going sideways, they're still going up and down. So what's that mean? It can only go two directions. If it's going to break out, it's got to keep going. If it doesn't, it goes down. Where does it go down to? The breakout level. The back test. And that is how you can predict price. Cheers.
we'll go back and look at the olds. Bye. Obviously, you guys know what's already happening. The market's going up. We're probably resetting the 5-minute and or some of the 1-minute volume weighted average prices. So let's look at a 5-minute. Let's throw a 5-minute volume weighted average price on the screen. We're going to go like this, like that, and then we're going to take one. We're going like that, and then we're going to go, oh my gosh, the 5-minute volume weighted average price just retested. How crazy. It's almost like we talked about that 10 minutes ago. Now it's happening. Weird. Why is that happening? Also, we're doing the 1-minute. The 1-minute volume, they're all about the same. So, anyways. So, that being said, whoa, crazy. There's another counter target done. Finito. Now what? Now anchor bottom. Previous low. Like so. Ready? Anchor. Low. Anchor. Settings. Low. There we go. Guess what? Pullback target here. Okay. Sounds good. Oh shit, can't see the chart. Sorry. Yeah, like I said, tomorrow I'm for sure going back to the other style. But anyways, it's mapped off. There you go. So you have your 5-minute, 1-minute target from previous high. When I say 1-minute target, it's just, again, you just know that there's a high chance the market is going to trade to and from magnetized levels as so. So obviously they're always a target, right? Even if it's not announced, again, they're always a target because the market is always moving to and from the key volume levels of the market like 80-90% of the time. So they're just always targets, right? So right now, target on the downside would be this box. It's not this box, it's these VWAPs. So whether that be here now or later here, doesn't matter. It's where the VWAPs are, right? So the volume weighted average price is here. So, what's our expectation? Just like when the market was trading down, these are untested volume weighted average prices from the high in the 5-minute. Now they're getting tested. Okay, if the 5-minute does not have a breakout and holds resistance, then we're going to look for a pullback down to here, right? But I can already see something else. We're establishing a potential 1-minute higher low here. So, if this 1-minute higher low is legit, this becomes a new anchor spot. And now we look at this volume weighted average price as opposed to the previous, right here. And you see how that just hit? See how the market literally just pulled back right into that box? Because that would be the volume weighted average price that I'm thinking of. You know what I mean? Now where? Now it's down to this box. Why? Because boom, done. Sorry. So that's literally how we just chop suey the entire market all day. And then kids are like, oh my god, it was so rough out there. It was so challenging. It's like, well, no shit. All we're doing is just ripping the market up and down from all the volume. We're literally trading it to your guys' stop outs all day long. Like, obviously it's not easy. Durr. Because what's the market do? The market wants to screw you over. So what do? We trade to and from key volume trends of a lot of the market participants of the day, of the week, of the month, of the 1-minute, the 5-minute, the 30-minute. No matter what time frame you're on, you're not safe. The market will come for you at some point or another. And we just watch those levels where you participate at, and then we throw tracking devices on you, and then we just try to go back and forth to your locations. Again, I'm assuming this is... I'm assuming the YouTube oversight cannot wait for this stream to be on the home screen of YouTube. The market wants nothing more than for the Boiler Room Network stream to be live front stage on YouTube with free foresight market analysis every single day. That is exactly
what the YouTube gods want. You think now's a good time to put 10,000 into SPXU? I mean, I guess it depends on what you're trying to do. If you're trying to time the top of the market without entering a meaningful downtrend, then yeah, I'd say go for it. Trying to make money, duh. Well, again, if you're going to be short, then you might as well just wait for a meaningful downtrend, right? Meaningful downtrend will start when the S&P 500 breaks down on the 30-minute. So I would just wait. If I wanted to be bearish, I would just wait till the market tells me to be a little more bearish. The only thing right now that's arguably telling us to be bearish on the market is, well, the market internals are selling off, and the VIX is creeping up over into its kind of levels where it could break out. So that's not the market being, or sorry, that's, yeah, I'm speaking too much. Again, just wait for a downtrend, then you can go short. Actually, you know what? You do whatever you want to do. This is not financial advice. I'm literally just giving market forecasts and analysis of when things are more favorable based off bullish bearish direction. Now, again, that's the other thing, is the SMA system does not predict tops. It just puts you on the right side of trend. So you would make more profit by shorting the market at highs and, you know, essentially predicting that the market will then go into a downtrend as opposed to waiting for the downtrend. So you lose out on that profitability, but you alleviate a lot of waiting time, possibility of, you know, markets not going down, and so on and so forth. Well, you know, basically if they're all key levels, right? So, I mean, here's one, you know, so let's see. So we'll keep it simple. So like this right here. So if you were long this market, you could have said, I think at some point it's going to pull back to here. So I will take profit instead of waiting for it to pull back to here. That's one. That's one way to use it effectively. All right. Another way could be, I think the market is going to pull back to here. So if for whatever reason you felt comfortable selling this top, you could have targeted that 1 minute as a target. Okay. We'll scoot over here a little bit. All right, so we'll take this one. We'll say that here's this market bottom, which again, it really is a market bottom, and so on and so forth. All right. And you say to yourself, well, I know that this is the long bias trend, right? Et cetera, et cetera, et cetera, off the low. So if we go below here, that's kind of the market breaking down, right? Here's the back test of that. Maybe you can take a short there, right? And so on and so forth. I mean, there's a bajillion ways to use them. Again, you can use them to minimize risk of letting markets pull back against you. You can use them as expected counter levels. You can use them as entry levels. I mean, that's pretty much it. I mean, we're showing on stream real time how you can use them, right? So look at somebody sold short here and here, right? So what are we going to do? We're going to bounce this market right now back to this view app. Okay. Oh, already too late. See it right there. Done. Because I know that someone sold the market off that candle. And if I want to stop them out, what am I going to do? Boom. They're done. They're out. So either they sell short here, take money on the way, or else we're going to pop them back to their average thing. So if they don't close out before this candle goes green, we're either going to use their stop, like their cover, to pop it, or we're just going to pop it. They're going to get filled here. And that whole trade that is pointless, right? That's a very small example. But That's it. Is if you went short, I know that you have a key volume trend right there. So if you don't take profit, will eventually pop into you, right? And then that would be a low risk 1 minute micro entry short. You're already green, right? So if you wanted to stay in direction with this volume trend, lower low, lower high, lower low, lower high, that would be your entry for entering that micro down, right? And then where would your stop be? Your stop would be above. And so that's how your short entry would be the wick, or you would have created the wick of that 1 minute candle, for example, right? Now, where's the VWAP, the next one, right? And the next one would be like right here. And that one is untested. We have not tested that volume trend. So if this previous one breaks out, that's where we would go. So ready? Look at this. Okay. So there's your 1 minute micro lower high, right? When this lower high in the 1 minute was established, you already anchored, knowing that this would be a back test. So you know anyone who didn't take profit here, counter trend back to there. Then you enter short. So instead of selling short on the bottom, you just wait for the counter and then you enter. So that's how you eliminate selling a bottom too, and then getting stopped out, right? So really what we're teaching on screen is how to map off potential lower low, lower high future formation of the stock market and the key volume trends at which we plan to do so. That's really what it is. And if, in this example, the lower low, lower high formation fails, your stop out is always that volume weighted average price you're currently on. And then where it stops you out to a lot of times is the next volume zone up. So we're essentially just making volume zones of all the people participating in the market and then using that to create the chart, if you will. Does that make sense, Joe? I hope that helps you understand how you can use it and so on and so forth, right? Again, guys, what are we seeing? What are we seeing out there in the old markets? Oh, look at that. That's crazy. The VIX almost did exactly what we said on the screen. What is that? Where the VIX breaks out what? Breaks out the 30-minute. Then what does it do? If it's going to go up, it has to just keep going up. Or what? Or it has to pull back and back test the breakout and then go. And that's what you just saw. So again, like we said before, there's only so much that can happen in the market. It can only go up and it can only go down, right? It's about knowing where it can go up or where it can go down to and blah, blah, blah. So there you have it. There is your VIX breaking out the 30-minute SMA, pulling back, holding support, and pressing up. And as a result, over the past 10 minutes, what do you see your market do? Go down. All right. All right, so look at where we're at on this screen. I'm on the wrong screen, but I'm going to bring it up. See this? Ready? So what are we doing? We're on this 1 minute VWAP trend. We know that if this pops, then it's just going to go up to this one. Now, granted, that doesn't look like a lot, and it's not. It's because that's just the way the market is currently set up. Where's the 1 minute pullback from this low? So if this is a real low, right, it's either just got to keep bouncing kind of up, or it's going to what? Have a volume weighted average price off this low. And then this will be a target for the high frequency trading computers, right? And or ourselves. So like if you were on micro, or if you were like trading like ES or something right now, not that I would highly suggest this as like a move. I'm just saying, oh, see that? See how that candle instantly split and went right up to the VWAP, right? How did it do that? Why did it do that? Because there's really nothing in between there. In between here, there's nothing. It's nothing. That's why it goes so fast from here to there. Because that is like, that's the vacuum zone, the VWAP, right? There is no VWAP in between here. So there's no reason to stop the market in the middle. It's right here. right? Now, granted, it doesn't always work like that, but that's the general premise, right? And then look in the micro. Look at where that pulled back to. Look at this. So if you think about it, look at where the wick is. So there's your wick. And then look at where the low of that wick on the 1 minute is. It was the previous VWAP, right? Now, it's not that you would necessarily use that, but it just goes to show how high frequency trading algorithmic computers specifically move price in between market participants volume. Also, look at where the target is here. Ready? Ready? Oh, don't be lame now, market. We were on a roll there. Now you're just trying to prevent me from looking cool, dude. Come on, wick down into the VWAP. Do it. Do it. Do it. Nike it. Hit him with the Nike. Hit him with the kids over in the sweatshop. Hit him with the Nike. Actually, pray for those children if that's a real thing. I don't know. That's always the joke, but pray for those children if that's true. Get them out of the sweatshop. Undo it. Nike, undo it. Oh, are they going to finagle us? Are they going to give us the live tagger Magoo? Oh, what a little scummy Magoo. They shy it by like a half a penny. I don't even know. Oh, wait. Yeah, we hit 662.01. Target 662. Oh my gosh, we were off by 1 penny, guys. I'm so sorry. I don't know what to do with myself. I must repent for my sins. There you go. That's how high-frequency trading computers manipulate markets in real time, in my opinion. There you go. I'm sure that one was on CNBC. Oh my, spring-loaded action, straight Iron Man, straight Elon rocket shipping to the moon. Where's it going? Probably the 5-minute trend. Let's take a look. Settings, low, high, ding, ding, ding. Okay, there we go. Oh my gosh, how crazy. Just bounced back right to the 5-minute volume-weighted average price trend that has yet to be tested. Target complete. Again. Like I said before, when the markets are more of a sideways chopping environment like you're seeing here, 1 minute and 5-minute volume weighted average price tactics work extremely well. Because on more of a sideways chop environment, the main objective is what? To really screw people over. Best way to do that is make sure things keep going back and forth to everyone's volume weighted average price. Now, what you're seeing on the screen will not work as effectively when we're in a bullish buying algorithm trend up or bearish selling program down. That's one where things will just shelf dive down. There won't be as many retraces. You won't see as many VWAPs getting hit, and that's because things are programmed just to kind of keep pressing. They don't want to do, for example, when the market wants to screw over and take you out, it's going to do higher low, higher high, back and forth, or even in the uptrend, etc. If the market wants to keep you out, it's just going to go. They don't give you the opportunity. So when things are an algorithm forced buying pressure up, pullbacks are very minimal. Opportunity to get in on the ride, very minimal, just as the market wants. When the markets want you to basically get chop sueyed, what are we going to do? We're going to ramp things up in between 1 minute, 5 minutes, 15 minutes, constantly, and just sauce your volume, right? But if we don't want you in, then we're just going to run things, right? So when you're seeing things go back and forth, you just got to know, like, that's the objective today. You don't fight that. It just is what it is. And when things are being on algorithm force presses, you just know that pullbacks are going to be minimal. That's just what it is. Dude, these ICT concepts we are teaching here, absolutely butter. So look at these candles. Look at this market today. Look at how bad that is. And look at how many times we've correctly called targets all day long. Because we're not trying to break the market out. We're not really trying to break the market down. So what are we doing? We're just trying to trade the market back and forth to all of the people's volume that's been participating in the market today. That's what we're doing on this stream for the most part, as far as those VWAPs go. Why is that? Because we know the market's in a macro long, but the VIX is trying to signal us to be bearish. So, and the market internals are not extremely bullish. So what do we have today? We have a bunch of opposing arguments in the market. It's not telling us to just step on the gas and go long. It's not telling us to step on the gas and go short. So what do? Hit him with the chop suey. And as long as you know that, then it's fine. It's no big deal. It's when you don't know that, you're like, oh my God, the market sucks. Which, I mean, yeah, it does kind of suck today. But it's okay for it to suck. But it's not okay for it to suck when you're the one trying to get it to break out and go long, and then try to get it to break out and go short, and then you get hit with the chop suey. Hit him with the chopper magoo. Appreciate the 13 of you guys watching. I'll probably be here for the next year, and if YouTube refuses to allow, if they don't give us the fair shake on the advertising of our stream, then we're just going to have to take up something else in life, which may be golf and stocks. I don't know, because if sitting behind the computer showing people how things move in real time before it happen doesn't get people's attention, who knows what will. So maybe we'll go to golf and stocks, because I really like golfing and I really like stocks. So maybe we'll just have to combine them, and then we're going to use that as a covert operation to infiltrate the market news cycles again, but with golf. I think it's a great idea. I think it's actually pretty genius. Pretty genius. What do you guys think? Since you guys are so talkative here in the chat. Oh, our friend Bitcoin. Gotta love it. Gotta love it. Hey, yeah, it looks like everyone in our private group's doing good today, so that's good. Mentoring's going well. Can't complain there. That's nice. Stay with us. Stock is great. I don't know. Like I said, might have to be packing up our old stock streams and transition to golf streams. I think that's what we need to do. I think it will bring more joy to life. Now you're out playing golf, talking about stonks, throw absolute darts into greens. Some darty magoos. Did shoot my best round this year was 4 under par, so I was pretty lit. Alrighty. What do we got? I don't know. What time is it? Well, it's about 12 o'clock. I mean, we've been on for like 4 hours. We've mapped off like 36,000 different trades before they happen. I mean, it's not like you can do a whole lot better than that. So, actually, hold on one second. Oh, actually, I think I forgot about something. Regular trading hours. Come on, market. We need to get absolutely bombed. Oh my gosh, would you just work? Holy cow. Yeah, we're still holding the buy signal volume weighted average price trend too, so that's kind of interesting. Yeah, anyways, so cheers. Hope you guys had a good day. Hope we mapped off about 16 trillion different trade ideas for you this morning. Kept you on the right side of the trend as well, which I think we pretty much did. So yeah, cheers to that. We'll be back on tomorrow morning. Hope you guys join. Make sure to share the stream with Ricky Gutierrez's chat room. That is always appreciated. I know that he likes that very much too. With that being said, we will catch you guys on the next one. Take care.